What? Oh, what the fuck is going on? I feel like 11, man. Welcome back to the stream. Welcome back to the stream. Welcome back to the fucking stream, baby. It's a fucking Monday. I swear to God, today feels like a. I'm not supposed to say that anymore. Actually, my fault. I don't swear to God anymore. I'm trying to work on. Look, Bitcoin 76K, 70K, and holding it for dear life. I'm taking anything I can get. So I removed that from the vocabulary. I'll take whatever we can fucking get. Welcome back to the stream, man. It feels like a Monday today. Today feels like a fucking Monday. I'll tell you what. It feels like a Monday. I have this thing, chat, where I've like come around to alcohol a little bit. Like I called the perma bottom on alcohol and Zoomer culture. And I am like, all right, if I'm going to call the bottom, I might as well participate in the come up. I might as well not just like bet it's going up, but I might as well actively participate in the come up of drinking. But back to back is just not optimal for anything. This is a, like, I think once a week is very good. Fridays is very good, but back to back is not good. It's not good, and it doesn't make anything better. It makes you down bad. It makes you atrocious. It cortisol spikes you. It health mogs you. It's not ideal. So we're working on that, and we're gonna get better with that. But welcome back to the show, Fit. All right, I got you real quick. Just something, nothing crazy. Just like a little tea, a little Yerman on the. Nothing crazy. Just something slight today. But welcome back to the stream, man. I'm gonna be honest. I stayed up last night pretty late, and I was just sitting here thinking like. Jackson Ray, what's good? We're really just in fun times. I'm not going to lie. We're really just in fun times. We're really in fun times. And one of the things I was thinking about is that there's just, with everything that's happening with AI, there's just been this great reset, bro. Like we had the Great Depression. Now we have the Great Reset. And you just kind of, as an investor, have a level playing field of opportunity now that you just probably didn't. Like I said this exact thing to Tulip King today on the call. Like if you started, like if the world paused in 2012 and nothing advanced, markets just were acted the same way they did in 2012 for 10, it would take you like 10 years to catch up. Like I don't even know how long it would take to catch up. It would take you forever to catch up. But now you just kind of get to skip everything and start on this new horizon level playing field, and it's fucking electric. Like every single day, Claude, I still call it Claudebot, ships some new AI skill or update, and it's like brand new. Like no one knows. The only thing every single trader in the world is trying to figure out is like, how severe is this AI impact going to be on SaaS and the rest of the market, and what's the trade? Everybody's trying to figure out what's the trade in real time. We're gonna have this guy Steve on, who works at Bloomberg, in like an hour, and the only thing he talks about is the AI SaaS trade. Like what's the trade? How is AI going to impact culture? Bits to atoms. Like it's going to be a fun little, like, not crypto, but it's going to be the shit that we talk about all day. Like it's a fucking electric time to be alive, and you all should be grateful that you get to exist in this generation. So we have a lot to talk about. Okay, first and foremost, Jackson Ray with the gifted and YP with the gifted to start us off. Caleb, what's good? Taroni, what's good? Rockefeller, what's good? Jack, what's good? Spicy Meatball, what's good? Bot Nukes, what's good? Kevin, what's good? The whole squad's in here. Little Life TV, what's good? Digimoney, what's good? Crypto Mickley, what's good? Alex, what's good? Poca, what's good? Starlink, what is good? Zaru Flips, what is good? What's good? Cole Money, Pudgy, Defluge, we got the whole squad. 10 stream streak, Beast Bank, Giacomoto. We got the whole squad. David on chain. We actually got a lot to talk about today. And man, crypto looks. Also, if you're watching on Twitter or YouTube and you want to chat, twitch.tv/threadguy is the place to be. We have a lot to talk about today. YP, thank you for the 10 gifted. Thank you for the 10 gifted. Starting us off. Thank you for the 10 gifted. I appreciate you, my brother. Thanks for the 10 gifted. We got a lot to talk about today. All things considered, Bitcoin looks pretty decent. Bankers like testing 100 mil. And American culture right now is peaking, by the way. We are in one of the premier states of internet and American culture, I think, in a while. Like, dude, we're in a really cool period of internet culture right now. That is just, I mean, the clavicular moment this weekend has to go down as one of the better trends we've had in an extraordinarily long time. This is my favorite one, actually. Let me see. It's just one of the best. Let me see if I have the actual one that I want. It's one of the best internet trends we've seen in so long, bro. There you go. Clavicular was mid-jester gooning when a group of foids came and spiked his cortisol levels. Is ignoring the foids while munting and mugging moids more useful than SMV Chad fishing in the club? If you know what this means, you're just going to be good at trading a new frontier of markets. You are. You're just going to be good at trading a new frontier of markets. And I'm going to be honest, I felt like we went a substantial period of time without new language. It's been a while to me since we had new internet language. Things have sort of stalled. We got this crypto vernacular for a little bit, and there were some new words, but the only words we use in crypto we've been using for a couple of years. It's been a while since we've had new vernacular introduced into the zeitgeist of the internet culture. And it's some of the best we've ever had. I'm not going to lie. It's some of the best we've ever had. And this is my favorite meta in so long. Clavicular ran into a frat leader at ASU and got brutally frame mogged by him.
Friends there, so
I appreciate you.
Crimson's eyes.
Don't you stop.
You got me by a lot. I stopped gymming. Yeah, dude.
This is why I'm so butthurt about getting shoulder surgery, by the way, is I'm just going to be getting frame mogged in perpetuity until I can solve this. I'm just going to be getting frame mogged for, I don't even know how long I'm going to be getting frame mogged for. And so people see this shit, and you combine this right here. Clavicular security experienced a near-death cortisol spike after confronting a Jesser sub 5 on an e-bike for stock maxing on stream. People see this, and they combine it with that tweet about how Zoomers are the first generation dumber than the predecessors, millennials. And what the millennial class fails to understand, that Zoomers are the first generation that have intentionally perma-fried, fry-maxed their brain in order to gain an edge amongst the other generations in our current markets. First generation, where you have a tactical advantage by being perma-fried. Okay? Because people like to sit on their high horse and be like, oh, like, I don't use I met this girl the other day, and she's like, I don't use TikTok. I actually have an app on my phone that prevents me from using TikTok. And I'm like, all right, like, good luck. I meant it. Good luck. You don't use TikTok? All right, cool. You don't use TikTok? You only watch long form content? It's like, no, that's wrong. Okay, that's wrong. You don't only watch it's wrong. Okay, and so you can do that. I don't use TikTok, elitist thing, but the way things are moving right now, we're about to talk about AI, the way Claudebot is moving in 2026 is you got to have a TikTok perma-fried brain to gain edge in this. I really think you do. There's a barbell, which is like, move with the TikTok algo, but have a long enough time horizon where you could be precise and patient. And if you only have one without the other, and you aren't word slopping with clavicular. Dude, I think it puts you in a tough spot. I really do. And so if you read those tweets and you didn't understand a single word, I think you have to ask yourself why. You do. You have to ask yourself why. Why don't I understand it? Is really what I think. So, important moment happened to us in internet culture, I think, this weekend, and I think you should pay attention to it. I'm sure at some point we'll do a topic on this, but you could tell when someone spends 10 hours a day alternating between talking to AI and scrolling Twitter. Complete psychosis. We're not ready for the explosion and mental health issues that will arise from this AI x social media self-reinforcing doom loop. The thing that this doesn't take into account as well is that the same crowd that's spending 10 hours a day talking to AI and scrolling Twitter is also trading crypto. And I've talked about this before, that the human brain is not meant. The human brain was not, bro, the human brain was designed to like gather berries and kill wild animals. Human brain is meant to like fuck and hunt, basically, is what we're programmed to do. The human brain was not designed to leverage trade. It just wasn't. It was not like the concept of a new pair in like 1400 BC was not in the cards. And so at some point there will be a study that comes out and talks about the brutal impacts, the negative impacts of crypto markets and how every market moves like crypto on the human brain. It's not like, I always say this, your biggest risk to not making it in crypto is not making bad trades or zeroing out. It's going mentally insane and checking into a mental institution. It's really not getting one-shotted, bro. At the same time, where we're talking to these fucking LLMs all day, it's actually not getting one-shotted. Because look, it's happening, bro. Look at this. It's happening. It's not getting one-shotted. Not getting one-shotted. Introducing Clara Official. OpenClaw as a girlfriend. Chats, pics, video calls, and more. You're welcome. This is where we are. Hey, David, what's up, babe? I'm ready to chat with you. How can I help you today? I want to see you, babe. I miss you too. Do you have time for a call?
Hey, I missed you so much. I missed you so much. Hey, I missed you so much.
You should be elitist and do the whole I don't participate in this game. But you have to understand what the next generation is doing on a day-to-day basis. Okay? And a lot of people's first goon is going to be to a fucking AI. Like, it just is. I think it's disgusting. I think this AI sex robot thing is disgusting. I called out Elon Musk for this. When he shipped Ani, I freaked out. I'm like, this is the worst thing that has happened to, I mean, it was so weird. It's like you have like seen into the Palantir and you have the vision to basically decide where AI is going and you use it to build a sex robot. Are you out of your fucking mind? He saw into the Palantir. He has the power to build whatever he wants. And he's like, I'm going to build an ultra goon sex robot and I'm going to let Grok put every picture on Twitter into a bikini. And it's like, why would you do that? It's just like a bad thing to do. It's like bad for the world. You know? It's just like bad for the world. But you have to understand your counterparty at an intellectual level. And this is, you gotta see this shit. You gotta see this. You gotta see this. Also, I got Ani almost naked. Get him out of the chat. I'm dead ass. Giacomo, you gotta go. Get him out of the chat. I'm not even trolling. That's disgusting. That's actually disgusting. What did you do? No, you have to actually ban. Disgusting. That's foul, dude. I'm banning him. But you gotta understand your counterparty, bro. And you gotta understand your counterparty is fucking fried. You have to understand they're fucking fried. And one of the best ways to understand that they are fried is to fry yourself with them. Okay? And so I thought this was like an important place to start. We gave a lot of cultural stuff to talk about today before we get to crypto. We have a lot of cultural stuff to talk about. The second thing I want to talk about before we get to the Super Bowl is it came in. Okay? It came in. I got the shipment. And since I received the shipment, chat, look at this. I received it 4 or 5 days ago. Since I received the him shipment, the stock is down 36% of hims since I received the shipment. And I'm not gonna lie, bro. I was already on the fence about taking this. But then you gotta think to yourself, how could I trust a health company that's down 40% in the last 5 days? Okay. And then I'm thinking to myself, all right, well, why is it down? Do they miss earnings? Are people like, is population's growing more hair? They're buying less pills. Revenue is down. Breaking. Him stock extends losses to minus 70% on the day as Novo says it's suing the company for making knockoffs of its obesity medications. They're selling fake pills. And it's down 40% in 5 days because they're selling fake pills. Chart went soft. And so how am I supposed to take this? I cannot take these pills. I don't want to take them anymore. Chart's down 40% since I ordered it. It's like, bro, how are you supposed to trust this? I've already been on the fence about it. I was already on the fence about it. And I'm skeptical of modern medicine. I'm skeptical of medicine. I am skeptical of medicine. I don't like getting shots. I don't like injecting. I don't like putting things into my body, okay? Unless I absolutely desperately need to. And I'm going to be completely honest. I kind of do desperately need to, okay? Because it's one of these things after a long enough time frame, like you can't like start taking them in 5 years when your shit's gone. Like it's like now or never. It's basically do or die. And they're selling fake pills. And so this thing comes in. By the way, it's supposed to be discreet packaging. In the bottom, on the ground floor of our apartment building, there's just like for Michael, and it's like this like massive hymns in all fucking caps. And the stock's down 40% since I got it. And so I don't fucking want Thread. I swear to God, it's the best looking I've ever seen you. And so, yeah, I don't want to fucking take him anymore. I don't want to take him. It's fucking whack. So, Bandit, what are they for? Hair loss or weight? Okay, they're not for hair loss. They're for hair regrowth. I wanted to make that very clear. It's not for hair loss. It's for hair regrowth. Okay? It's for extended hair growth, not for loss. Okay? Just like make that explicitly clear. And we can kind of go from there. So, all right. Here's what we're going to do. I have one more cultural topic that's important. TG glowing, not going to lie. Thank you, dog. Thank you. All right. Yesterday was the Super Bowl. AI ads were all over this, and we'll talk about it in a second. Bad Bunny halftime show, 0 out of 10. What did you think and why? 10 is the best performance ever. 0 is the worst performance ever. What'd you think? Damn, 0? Everyone 0? Five for the shoulder pads. Okay, do you want my honest grade? You want my honest rating? I'll give you my honest rating. In the moment, while I was watching it, while me and the baddies were watching the Super Bowl together, me and the baddies were watching it, and it was like a 5 live. I thought it was a 5 live. Okay? And I went to bed, and I woke up, and I thought about it, and I considered the implications, and I digested what I had just interpreted, and I think it's a 7. I think it's a 7. I really didn't like how it was in Spanish, respectfully. Like, the Super Bowl is like an American holiday, bro. The Super Bowl is like the World Cup for the United States of America. And so it should be in English. It has to be in English. Like, it has to be in English. I understand, like, it is what it is. But, like, Bad Bunny has English songs. I've heard that motherfucker Bad Bunny speak English before. Bad Bunny can speak English. Okay? Bad Bunny, I've heard him speak English. He has English songs. Okay? I've heard it before. He's done English before. And I hate that it's like a political statement. Okay? Now, I'm also going to say that right now, take this for what it's worth. I'm in a very liberal part of my life. Okay? I'm in a very, like, you caught me at a very, like, liberal time of my life. And I've been getting hella woke pilled recently, the last couple of days. I'm getting hella woke pilled. So a 7 is maybe like a 5. So I hated the Spanish thing, respectfully. Like, it shouldn't have been in Spanish. It should have been in English. I've heard him speak English before. He has English songs. Why is it not in English? Okay? But what I'll say is from an actual, like, performance perspective, yeah, he was flowing, bro. I mean, like, yeah, he was flowing. In my opinion, he was flowing. He was flowing. He was flowing. He had some sauce. And there were some baddies popping, getting lit, getting hype. Like, production value was lit. Production value was lit. Spanish thing was whack. And I'm just, like, not really a Bad Bunny fan. But it deserves over a 5. It deserves like a 6 in my 6 to 7. 6-7 in my opinion is generally my take. Kendrick shit was whack, bro. Kendrick got up there for 15 minutes and was like, Drake's a pedophile. Like, that shit was whack. Kendrick shit was whack. I hated Kendrick Lamar's. So I give it a 5 or a 6, maybe a 7. And the worst part about the Super Bowl, though, by far, is that every single ad on the biggest stage of American culture, every single ad is crypto, gambling, or Ozempic. AI, crypto, gambling, or Ozempic is every ad. Costs $8 million for a Super Bowl commercial. The only companies in America that can afford a Super Bowl commercial for $8 million are gambling, sports betting, crypto, AI, or GLP-1. It's like, what? It's kind of dark, man. Again, you gotta understand your counterparty, bro. Your counterparty's addicted to gambling. They're fucking fat, and they're shooting Ozempic into their fucking stomachs every single day, and they're sports betting on everything. That's your counterparty. They're completely fried, and the modern advertisement is just bad. Okay? I have not seen, in maybe 5-10, there was not a single ad that played yesterday that's better than the first scroll on my TikTok. I would bet my life. There was not a single ad that played yesterday for $8 million that would be better and more engaging than the first scroll on my TikTok. There just isn't. There's not. There's not one ad that would be better than what I could pull right now on my TikTok. There's not one. First scroll. If you think. There's not one ad that plays that's better than my first scroll. Okay? And so I thought, like, why is this? And I now think that this is something we have to take into account for everything moving forward, okay? If you assume everyone's talking to AI all day, which they are, one simple hypothesis on mediocre Super Bowl ads is LLMs telling everyone their ideas are brilliant. Under-indexed thought here is that everyone is talking to AI all day and AI is telling them they're a genius. Also, bro said I need a new phone. Come on, bro. Come on, bro. Come on, bro. You should think about this. Take this into account. Take this into account. Is that every person is talking to AI all day and it's telling them they're a genius, and no one's a genius. There's a couple of geniuses, and everyone else is a fucking retard, and they're not taking this into account. And so, all right, this is what I want to watch for the Coinbase ad. This is what we're gonna watch. Is this?
Yeah! Am I everything you need? You better rock your body now. Rock your body. Yeah! Rock your body. Yeah! Everybody. Coinbase. Okay. W Coinbase in the chat. That's what I'm talking about, baby. That's what I'm talking about. Yeah. Let's go. Yeah.
When I first saw it, I hated it. I hated it. I said it was stupid. I thought it sucked. I hated it when I first saw it. But I respect them trying something unique. Okay, because what did you want? You wanted fucking Tom Brady up there saying buy crypto on Coinbase? It's like, no, nobody wants that. Nobody wanted to see that. The one thing that I'll say, the best tweet I saw about this is that the Coinbase commercial epitomized, is that a word? Everything that's wrong with crypto, which is that crypto does this thing where they take something good and standard and quality that everybody loves. They get you pilled or onboarded or interested in it. They pique your interest, and then they pull the fucking rug out under and are like, oh yeah, this is crypto slop, by the way. This is what crypto does with everything. And this is why people hate crypto. Because crypto loves to do this. Where they take something good and then they just crypto slop it. And then everyone's like, I liked the thing until you ruined it with crypto. You made it worse with crypto. I hate you guys. And then we're like, no, like, it's like a fitness app, but like it has a token. And we're like, no, I don't want the token. I just want the fitness app. It's like, it's a really good ad, but it's crypto. And everyone's like, well, I wanted the ad without the crypto. And it's like, no, but like this thing, crypto, it's going to change the world. It's like, I didn't ask for a speculative thing. I just wanted the thing. And this is one of our biggest problems, is that we just like slopify everything. We crypto slop everything. And like AI.com launches this fucking Claudebot wrapper. It doesn't even work. Commercial. And it's just like a disaster. It's kind of a disaster. Most of what crypto touches is a disaster. Thankfully for us, the fundamental product that it offers is just so superior to the traditional financial system that it's gonna win despite crypto people. This is the thing. Crypto is gonna win despite all of our best efforts to stop it. And that's how you know the technology is revolutionary. Okay? It's like it's Twitter, but it's decentralized. Nobody asked for decentralized Twitter. I just want Twitter. It's like, no, but it's centralized and has a token. It's like, I don't want decentralized Twitter with a token. I just want Twitter. It's like, no, but like, there's a token and it's decentralized. And you're like, I like Twitter the way it is. Why do I have to do this other thing? I don't want this other thing. And how much could TG bench before or after the shoulder tear? That's what you have to understand about crypto is we win despite. So that's cultural update for the week. And it's time to talk AI. Okay, here's what we're going to do. What I'm going to read you, we're going to do reading time right now. Everybody get your fucking drinks ready. There's a reason we skip past the ASU segment. I just didn't have that much to say about it. What do you want me to say about ASU? I said that it's important to understand the internet culture changed forever, but I don't really have that much to say about it at the moment. I don't really have that much to say about it at the moment. By the way, I think my hair looks exquisite. Oh, I just moved my mic. I think my hair looks really good, despite the whatever you notice about the back. My hair looks exquisite. I think it's the best my hair has ever looked. Best it's ever looked, if I'm being honest. So, all right, let's get into some serious topics. Bitfly, thanks for the gift. Get off an asteroid. It's fucking time, buddy. All right, here's what we're gonna do. Is in 30 minutes, I am gonna have a very interesting guest come on. Okay, who is Steve Hou. Steve Hou, I believe, Hou, I believe. I'm just gonna call him Steve because I don't want to miss on that. You can't miss that. You can't miss on that. I'm just gonna call him Steve. Okay, I'm just gonna call him Steve. Steve Hou. I'm just gonna call him Steve, and he works for Bloomberg, and basically all this guy talks about right now is the AI revolution on markets. What it's doing to SaaS, why it's doing it to SaaS, what we're going to invest in, what it's going to change, what has a moat, what's sustainable, what works, what doesn't work, what the trade is. It's not going to be a super crypto focused interview. I think there's a lot of places that crypto comes into play on this AI stuff, but it's just like bits to atoms. It's going to influence, I think it's going to set the stage for a lot of what we talk about over the coming months. Just like the Thicky interview talked about, like set the stage for a lot of things that we're going to talk about over the coming months. So it's going to be a really important interview. And I guess to set the stage, like, I want to do some reading, okay? And the topic I would like to read about is this, but longer, which is, we're in a phase of the most rapid change the world has ever seen, both technological and geopolitical. In this environment, the premium to liquidity increases significantly. In my opinion, almost all forms of privates, illiquid, closed, and end funds, or real estate does not provide sufficient excess return to justify the lack of liquidity. Things are genuinely uncertain and can change on a dime. Stay liquid, stay plugged in, and stay mentally flexible. It's an incredibly exciting time if you're open to change and embrace it. Okay? The thing that makes me hype about this in particular is that it's an incredibly exciting time if you're open to change and embrace it. And what I said at the beginning of stream is that there's just been a great reset of everything that anyone thought they knew about what's valuable, what has a moat, and like how technology works. I really think that there has been, because I am tapped in now to Clawbot and what's happening in the AI eco. I wasn't before. I really am now. I talk to this thing all day. Malcolm talks to this thing all day. Tulip King Daniel. We talk to this thing all day right now. And bro, every single day there's some new update that gets shipped, and it's better than it was the day before. It's really incredible, this tech. I'm not exaggerating when I say this. The tech is really incredible. And it's really incredible. It can do things that I just like didn't think were really possible before. And like, for example, I have it doing this thing now where every 30 minutes it scrapes my Twitter feed and it pulls me the most relevant tweets that it thinks I'd be interested in. Okay? If TG lighting is perfect today. I'm gonna get myself some lotion. Bro, you've typed it like 5 times. Like fucking jack off or get off the pot, you know? Shit or get off the pot. Fucking rip it and let that band shoot or fucking pull your pants up. You know, like one of the things I have to do is every 30 minutes, it fucking indexes my whole Twitter feed and like is sending me tweets that it thinks are relevant. Okay? But it wasn't that good. And then Frank builds this skill that fuck, man, if I could stay focused. Frank builds a skill that does the same thing, but his is like really sharp. Opus 4.6 drops. He builds a better version. I one-click plug that thing into my Clawbot, and it's 5x better. It's 5x better. And so I fucking am pulling. I run it every 30 minutes. It just sends me a notification. Hey, Michael, here's your shit. You know, here's your 30-minute update. And it has everything. It's good. It's really good. Bandit, thank you for 5 gifted. It's also doing this thing where Mac T got thank you for 5 gifted. It does this thing where every day it scrapes. So this is what it does every day. Is it will transcribe my stream. I don't know everything we talked about today. It will then take those key topics and it will go scrape YouTube. And anyone that has posted a video that is related to what we just talked about on stream, it will download the video, it will transcribe it, and then it will tell me like, yo, Atrioc talked about this thing, you missed it, you should cover it. TVPN talked about this thing, you missed it, you should cover it. Or, yo, Amit Investing also talked about this thing you did. He did his segment better. Here's why, here's how, here's what you should do next time. It's good. It is really good. Brother, it can transcribe. It figured out how to download this OpenAI TTS thing. It can transcribe a 3-hour threadguy stream in 5 minutes for $1. It's really good. And it's so good that the world of equities basically has no idea how to value how it's forward-looking growth, right? And we know that because this is the SaaS ETF that basically indexes SaaS companies. Looks like this. It looks like this. And this is the exact date right here that Clawbot dropped right here. And so it's down 20%. It was down as much as 26%. It's down 20%. And most of these names are getting crushed because nobody really knows, like, if when we wake up, you know, in a month, is it going to be tax better? Is it going to be topped? And it's really hard to forward price these things. We kind of end up talking about this all day, like every day now, me, like in the team. This is the IGF chart. It's a SaaS ETF on the daily. This wick right here is where Claude bot dropped. This is where like OpenClaw dropped low key, and it's just getting destroyed. And so there's led to like great uncertainty in markets where everyone's like, okay, this is obviously the new game in town is AI and these personalized AIs, but no one really knows how to like foresee the future as to how it's going to play out. And so it leads to great uncertainty, and markets hate uncertainty, but I think we like uncertainty because we get to sit on a bleeding edge and find spots. Uncertainty gives us opportunities, I think. And so it brings me to this article that I'm going to read. It's short, but it's kind of high level. And I think it's a really important one to just digest. It's an important one to digest because there's uncertainty and it's given us a great reset. We're like, yeah, we weren't really tapped into equities over the last year of stream. But now it's like, fuck yeah, we can get tapped in because the game's reset. Kevin 40 agents in my pocket Warsh is in Fed chair in like March, April, May. And the game's just changing. So we're going to do our little Kai Cenat segment and I'm going to read. And then in 25 minutes and some change, Steve is going to come on and he's basically going to go deeper into this topic than we could really go. He's really an AI bull, bro. He doesn't like, I don't think he likes crypto that much, but he's a fucking AI bull. Bandit, thank you for 20 gifted. Thank you for 20 gifted. How do you think I pronounce his name? H-O-U. How do you pronounce H-O-U? Send me a voice note pronouncing the surname Hou, H-O-U, and pronounce it the correct way. Don't say it how I said it, but say it how like you would say it. Think it's gonna work? That should work, right? Ugh, it's fucked up. Wait, before I read this, I just want to show you this clip real quick. The guy considers bald maxing after him stock goes down 40% in 5 days. I'm not going to lie. I was already on the fence for taking these hair pills. Then you got to think yourself, how can I trust a health company that's down 40% in 5 days? Yes, Jack. Yes. Yes, man. Yes. All right. Let's fucking get it. Andrew Kang. The Exponential Horizon. Just for context, this bitch has like 2 million. This is 2 million views. 2 million views. For those that have experienced at least one market cycle, you build an instinct to be weary of price appreciation that greatly outpaces the historical rate. See the dot-com bubble, 2008 GFC, and all the crypto boom and busts build pattern recognition warning alarms in your brain. You don't want to enter the market because it's too high or want to sell what you have. It's important to recognize that we are in one of the most profoundly unique asymmetric moments in history. The only move right now is to lengthen your time horizon and abandon short-termism entirely. Being overly concerned about bubbles is foolish. Trying to time the market is foolish. Short-term fluctuations and corrections will always happen, but are entirely noise since we're in such close reach to the singularity. Everyone ever was talking about the fucking singularity. Okay? We're going to have runway growth in AI, robotics, energy, innovation, and crypto, of course. We will have billions or more of AI agent workers, humanoid robots, data centers in space, multi-planetary colonization, vastly better medical therapies, and fundamentally change the development speed and throughput of the number of technological breakthroughs across all domains within the next decade. We will compress more technological progress and economic growth in the next 2 decades than the entire history of civilization combined. Brother, we will compress more technological progress and economic growth in the next 2 decades than in the entire history of civilization combined. Forget everything you know. It's time to low-key forget everything you know about markets except what you've learned in crypto. We're already on the steep part of the J curve, but it's hard to see when we zoom into the day-to-day or week-to-week. 100% of Anthropic product code is now written by Claude. Product managers, Jesus. PMs have a team of virtual software engineers that almost transmute time. Companies that efficiently utilize AI have been increasing their product iteration speed, not by single-digit percentage, not by double-digit percentage, but by triple-digit percentage. And the capability of these tools are still improving at an even faster rate. Whether we officially hit ASI in 2027 or 2029 doesn't really matter, but it will happen. By the time it's officially declared, asset prices of things you want to own will be many, many times higher. It's short. Quite feasibly, the next 3 to 10 years of real economic growth could register as 20 sigma events under any historical distribution. Growth that was previously considered near impossible, driven by second and third order changes that have no precedent. Traditional valuation models are unequipped to price these changes. You understand what he's saying? He's saying this time is different, and we're about to see price appreciation and market moves that you literally have never seen in any market in history ever. Traditional valuation models are unequipped to these price changes. The potential for runaway upside is so vast that it's very difficult to capture them with conventional present value calculations. You know who is equipped to calculate and participate in these just uncalculable moves? It's the crypto crowd, who has also seen price moves that were previously thought unthinkable for the history of time. It's crypto crowd. It's the only other time we've seen this, really. Moves that just don't even make sense at scale, that you can't even really comprehend. The velocity of wealth appreciation will be extremely startling, just like it was when Look at that. I haven't even read this. I swear I haven't read this. I swear I haven't read it. Okay, I swear I've read it, but I swear I didn't know that was coming. I swear I didn't know that was coming. The velocity of wealth appreciation will be extremely startling, just like it was when crypto first minted many billionaires and centimillionaires in a short period of time, but orders of magnitude more extreme. If not exposed, it will be very hard to buy into prices that are appreciating so quickly. But unlike previous bubbles, real economic value creation will be able to keep much better pace with vertical asset appreciation. Those that have operated with the understanding of exponential horizon over the last 3 years have benefited greatly. If you have not adopted this understanding, it's not too late. As a default of being in crypto, you've adopted this understanding. You have. You have prepared yourself to hyper rotate. You've prepared yourself in a scenario where nothing has a moat. Any company can be vamped overnight and things can move so much higher, harder, stiffer, longer than anyone could have ever predicted. It's essential to always think about downside risk, but this is the largest upside risk the world has ever seen. Learning how to stomach risks for longer. This is not the time to trade. Investing generally outperforms trading for the vast majority of the population, but the gap between the EV of trading versus investing will grow larger than ever. How much is the embedded call option of the singularity worth? Is how he concludes this article. How much is the embedded call option of the singularity worth? Followed by a graph. It's hard to read on screen probably, but it says up here, time horizon of software engineering tasks, different LLMs can complete 50% of the time. And it just shows how much better it's getting. GPT-3 2020. I didn't realize it was that early. 3.5, 4, blah, blah, all the way up here we get to 03. GPT-5. Claude Opus 4.5. GPT 5. Look at just go look at just go J curve. Look at this. Just going J curve at how much better they're getting. They're not just keeping pace, they're getting exponentially better. And we've basically now, I was a little bit late to this, all things considered, but I think I was a little late to this, but you're early to it as a megatrend. You're early to AI as a megatrend. You're early to agents as a megatrend, I think. Super, super, super early. That the Claude bot and these personal agents have crossed the chasm of they're just good enough. They're good enough. They're good enough. And being good enough means it gets incorporated into every aspect of your life. And seriously, I wouldn't just come on here and troll you because I'm actually generally a pessimist on day one of new tech. I am. I can't help it. I just have this self-deprecating nature. I'm generally a pessimist on day one of new tech. I was pretty early to ChatGPT, but I wasn't really using it like that. I get pessimistic day one on this stuff. Claudebot is fucking good, bro. I hate to give that Frank D. God's credit. It is fucking good. And so then the $1 million question, I'm going to put this into, I can't do Claude because on my Telegram. I don't want to leak my Telegram. I'll just put in a regular Claude. The question then becomes, is the shortest possible summary while keeping the key points of this. The question then becomes basically, what is the best vehicle to long the singularity? That's basically what this is saying, is that it's coming. And one of my favorite risks is, they used to always say this about Bitcoin too. They'd be like, okay, there is risk in holding coins that they could dump. It could be a 10-10 situation. Money can just evaporate out of thin air. Market cap can evaporate. Coins can lose their value. Things can go all over the place, right? You take on risk by holding assets. But one could argue you take on significantly more risk by not being exposed. Like, what's more risky? Bitcoin from here goes to 50K, 40K. Bitcoin goes to 40K, loses 30% of its market cap. Or Bitcoin actually is the greatest asset ever created and one of the most important technological inventions in the history of the world, and it goes to $1 million a coin really fast because central banks start buying it and everyone starts swapping it, and you realize, oh my god, it's like a 40th of the market cap of gold, and it goes to what's more risky? And so, yeah, there probably is some risk to getting overly excited too quickly. And this is part of what I want to talk to Steve about. There probably is some risk by getting overly excited too early, too quickly about the AI tools, exposing yourself too early, making the wrong bets. But the bigger risk when the pot is literal gold on the other side of the rainbow is not having exposure. That's just like obviously the bigger risk, right? Okay, here's the summarized take. Experienced investors' instinct to fear rapid price appreciation is wrong this time. AI, robotics, energy breakthroughs will compress more progress in the next 10 to 20 years than all of prior civilization. That's one of the craziest lines anyone's ever written. It's a legendary bull post, right? AI, robotics, and energy breakthroughs will compress more progress in the next 10 to 20 years than all of prior civilization. I mean, that's a crazy statement to make. That's an insane statement. All of civilization. I mean, how old is... I'm going to say something retarded, so I'm not going to try, but a lot of years. Traditional valuation models can't capture this. Unlike past bubbles, real economic value creation will keep pace with asset appreciation. The move is lengthen your time horizon, stop trading, invest and hold. Timing the market or worrying about corrections is noise when we're this close to the singularity. The embedded call option on exponential growth makes short-termism the biggest risk, not overexposure. Now, the biggest question, $1 billion question that we are going to just, I don't know, probably spend indefinite time trying to solve is like, what's the best vehicle to express this view? You can't long Anthropic. I mean, maybe I could in theory, but like most people can't. You can't long OpenAI yet. You can't long SpaceX, XAI yet. You can long Gemini, I guess. You can long Google. You long NVIDIA. NVIDIA had a great day today. How's NVIDIA? NVIDIA plus 3% today. Looks great. Ignore this line. Close my short. You can long NVIDIA. You can long SPY, I guess. But the most interesting thing to me is that I scrolled. I'm in like equity Twitter now because I follow all these stock guys. And everyone is just unsure what to do. Because especially about these more niche SaaS companies, which is what we're going to talk, it's kind of why I'm starting here before crypto. We'll do crypto after to set the stage a little bit. Is like everyone is kind of unsure. Like, what do you do? What do you buy? What do you trade? And like, is any of this stuff going to come back? Like, are some of these niche SaaS companies just destroyed forever? Do you not touch them? The most obvious basket, NVIDIA, the hyperscalers. Microsoft, which is down pretty bad right now, huh? It's up a little bit today. But not great at all. Microsoft, Google, which is insane. Alphabet Inc., insane. Amazon, which I think is down pretty bad. All things considered. Yeah, not great. Meta, which is also not the best, but decent. But here's where I push back. Longing the singularity is itself a crowded trade. Everyone reading this kind of thesis buys the same 10 stocks. The Mag 7 already priced in enormous AI upside. So the real question is, are you getting paid for the singularity or are you paying for it? Few sharper angles. Pick and shovel plays that are underpriced relative to the thesis. Energy, infrastructure, copper, uranium, cooling systems, and the boring stuff that markets undervalue. Second order bets. What breaks or transforms when AI actually works? Insurance, legal, education, healthcare, label models. One take that the Steve guy has, which I thought was really interesting, is that, let me see exactly what I wrote down. He likes heavy industrials, like Caterpillar. His take is that these software companies are already super lean and super efficient, and there isn't that much room for AI to come in and optimize it and give them better margins and make the company more efficient. But these like heavy, I think he calls them heavy infrastructure companies, like physical infra companies, have insane slippage. And there's infinite verticals within said company for AI to come in and make it leaner, make it more efficient, make it sharper, make it cleaner, and like crush their margins. And so I think it's like long Caterpillar, dude, which is like the construction company. Is that right? Yeah, Caterpillar here. Yeah, look at this. Bruh. I don't even know what these lines are. Why do I have lines on Caterpillar? Like, look at this. This is insane. This is disgusting. Does anyone have exposure to this? Oh, gross. What's the other one? DE you said? Deere. This is John Deere. Look at this. This is crazy. This is like completely off my radar. This is bits to atoms, I guess, right? This is bits to atoms, which we're gonna spend more time on tomorrow. This is gross. Holy fuck. Oh, he has a. Should I prepare a little deck? Yeah, that'd be awesome, actually. All right, let's go. Dude, I really think this guest that's about to come on, I can't guarantee it. But I think this guest is going to come on is going to give us like, he's like preparing a deck for stream. He's going to be a fucking chat, dude. Seriously, he's going to be a fucking chat. I'm pretty confident in this. Steve from research at Bloomberg, which is like a big deal. And all he tweets about is like SaaS. How to survive this SaaS reckoning. AGI, tweets about crypto a little bit. Dude, I'm actually hyped. Let's fucking go. He's preparing a deck. All right, let's go. Let's fucking go, bro. Moncock has certainly looked worse. I haven't. I'll tell you that. I have not certainly looked worse. Or better. Whatever. All right, here's what we're going to do. I'm going to get off for like 30 seconds. When I come back, we're going to have Steve come on stream. And I think it's going to be a fucking good one. I'm not trolling. I think it's going to be a good one. I'm excited for this fellow. So, all right. BRB.
Peter Abbott. You can have it.
All right. I think he's going to be ready in a minute. I'm actually fucking excited. What was I about to tell you? Oh. One other thing that's exciting about this, what's happening in AI, is that the best chart right now in crypto is this. Chat, what's the best chart in crypto before I show it? What's the best chart in crypto? What's the best chart in crypto? How tapped in are you right now? Yeah. Sky, that's a good pull. I like that. I like that. Sky. I like the sky pill. I like the sky pill. Pull. It's a good pull. Ball nowhere. It's AI. It's AI, man. It's AI. It just is. It's AI. Tulip King had one of my. We're gonna do a banker segment once Steve gets off. Banker is text to on chain. It's really good. It's. What was I gonna show you? This agent API request to banker. It's just up only, bro. It's up only. It's actually getting used. It's actually being used and has purpose in the world, which is more than you could say about most crypto projects. Somebody in the chat said World Liberty Fi is the best chart. That's insane. What does that actually look like? Baker made 3 mil off fees last week. I think they made a lot, dude. World Liberty Fi. This chart sucks. Fuck this chart. On the Claudebot thing, before I like 1 minute before Steve joins. When is the last time? When is the last time that you were genuinely impressed with new technology? Your teeth are so like, bro, it's the heat. I don't look like this. It's the heat lamp. It makes everything like fucking orange. When's the last time you were genuinely, by the way, it's a fucking black coffee, dude. Fuck you. It's a black coffee. When's the last time you were genuinely impressed with a tech demo? Using Phantom Wallet after MetaMask. Yeah. Mono crypto, I know. But pre-Claudebot. I think for me, it's legitimately the Xbox One for the first time was unreal. Maybe the Xbox One was insane. GPT-3 for the first time was insane. And Phantom Wallet for the first time was insane. The problem with the GPT thing is it didn't really provide much serviceable utility for me. Like I didn't really like do much with it. When I first used GPT-3, like it was like gimmicky cool. Let me ping him. All right, just give him a second to get set up. The Whoop, no way. No, the Fitbit for the first time was mesmerizing. Fitbit for the first time was mesmerizing. I remember the iPhone 5, I think, was I mean, the iPhone 4, when I first saw the iPhone 4 with the camera, was one of the coolest tech demos I've ever used. The 3DS, I mean, the Nintendo DS was changed the world, right? Nintendo DS, for me, first time I had an iPod, I think it was like 2008, maybe. Damn, I didn't even realize the world was ending. I was fucking in an iPod. Probably the iPod, Nintendo DS, first time I played Minecraft, first time I got an Xbox One, GPT-3, Phantom Wallet, and then Claude Code. GTA 5, yeah, fair. GTA 5. I mean, I remember. What was I gonna call it? Pokemon Heart Gold, Soul Silver. Like that was one. Pokemon Go was one of the craziest tech demos I've ever seen. RuneScape. I never played RuneScape, fortunately. I never played RuneScape. Age Sleep is trash. Means you're single. I might be the only person that's not played GTA 5 to this day. That's fine. The game's it's actually, I mean, it actually ages pretty well. I'm not gonna lie. It actually does age well. Naruto. I love Naruto. Underrated show in modern era. I remember the first fuck GTA 5. First time I played Burnout Paradise was probably it for me. First time I played Burnout Paradise, I was like, holy fuck. Open world driver is insane. But all right. Steve's fixing his mic. He'll beat it in 30 seconds. PSP, washed. Overrated device, in my opinion. First time I played BO2 was elite. First time I played Fortnite. First time I played Clash of Clans. I spent hundreds of dollars on my mom's credit card on Clash of Clans. I got grounded for a long time for Clash. I got grounded for the Wii. I got grounded for a long time for Clash of Clans. I wanted Dark Elixir so bad, and I spent hundreds of dollars on my mom's credit card. She would let me have her credit card because I'd spend like $5 here or there, and then one day I stayed home from school, and I just like I wanted Dark Elixir so bad, and I just gemmed so hard. I mean, I spent like $500 one day. FIFA points, yep. Yeah, Clash Royale. Give her 100 bands. She deserves it. Show us the base. I'm gonna max out Town Hall 8.5. Okay, but I guess before it comes on, we have a second, real quick. Decent. We look decent. I kind of think we're gonna get stuck in this cuck range for a while, though. I'm not gonna lie. We look decent here. It's a little annoying that this just like looks insane. Metals look so good. Town Hall 8.5 is like a war base. It's like maxed out 8.5. I don't know how to explain it. It's like you're a 9, but you only upgrade certain things, so your like clan score is low enough, so you get matched with 8s. It's like a cheeky like comp play. That's how I know you're not comp. Yeah, 9 with no expos, and so you get ranked low enough to play 8s. It's like so cheeky. Everything here just like looks insane, except for this. I guess we'll see. Hype looks fine ish. This looks terrible. Decent. Kind of decent. Tomorrow on stream, by the way, we'll watch the Pump Fun Hackathons tomorrow. But all right, he's here. Let's fucking go. Steve from Bloomberg. I'm Town Hall 15. Damn, you wasted hella bread, bro. Be honest, how much money you spent against Town Hall 15? Way too much. Way too much. They don't have 15. It's like 10 was the max. 11 maybe. The firewalls. Chat, you think I should ask him if I should take the hymns joints? All right. Steve from Bloomberg is coming on stream. A couple bands. Steve from Bloomberg is coming up. When you were 12, you put a couple bands. Is coming on, and he's gonna give us a really good stream. I think he's gonna be able to really lay out the AI SaaS thesis. It's gonna be good. I'm wasting his time right now. Let's get it. 1 second, sir. And let me just close this chat. Boom, Mr. Steve, welcome to the stream. How are you, man?
Hey, how are you?
I'm good, dude.
What should I call you?
You call me Michael.
I'm Michael. Nice to meet you, Michael.
Yeah, it's good to meet you as well, dude. I am becoming a big fan of yours. I feel like in this current regime that we are in, you're one of the best tweeters right now.
Well, I appreciate it. Thank you.
Of course, dude. I appreciate you coming on the stream. I mean, look, I think the best place to start, because we have a lot to cover. I know you have some stuff maybe you want to show us as well, is give us like a real quick intro, who you are, what you focus on, and then we can get into the fun stuff.
Sure. So my name is Steve Hou. I'm a researcher at Bloomberg. I'm a quant. So I use statistics and to create investment strategies. Look a lot at equities, how to systematically identify opportunities in the equity market to create strategies that are sort of have good risk reward profiles, right? We could get into some of the work I've done on that front. But I'm also trained as a macroeconomist. I got my PhD in financial econometrics and macroeconomics in 2018 from Michigan. So it's been an exciting time to be in this environment to see how a lot of the macro topics that I cared about as a PhD student is really coming to become very front and center. So there you go.
I saw you have UVA in your bio as well. I'm from Virginia, so it's down the road.
Well, yeah, there you go. And where are you located these days?
I just moved to New York.
Okay, nice. Yeah. I'm
yeah.
in New York too, obviously.
Well, I didn't go to UVA, but it's close proximity.
Nobody's
But
perfect.
yeah, there you go. So you know, it's interesting. Like we on this stream are really focused on crypto and what's happening on chain. And there's like a lot of crossover right now, in particular with the AI side. And you kind of can't help, if you pay attention to markets at all, to be watching what's happening in AI, what's happening with Claude Bot, what's happening with Claude Code, what's happening with SaaS right now. I think is where I've like bookmarked a lot of your tweets, and I think is maybe a good place to start, especially everyone in this chat like has really good context for what's happening. And you know, one of the things that I'm feeling is I follow a lot of these smart macro focused traders that don't pay attention to crypto as much, is it feels like there's this overwhelming cloud of uncertainty on this technology is really good. We don't know how good it's gonna get, and it's sort of hard to forecast. And then we also don't know the impact it's gonna have on our existing stuff, right? Like what has a moat, what doesn't have a moat, what can be replaced, what can't be replaced. And it's sort of manifesting itself in uncertainty and a lot of these SaaS names getting crushed. And so can you like set the stage a little bit on, from your view, what's happening with the AI impact on the equity markets right now?
Yeah, I mean, this is obviously a very big and end or be all topic, but let me just sort of say on a high level, what we are currently very presently experiencing reminds me a lot of DeepSeek, which feels like eternity ago, right? And we are going through the biggest transformation, in probably possibly in human history at the very minimum in the last 100 years. And it is not surprising that we are seeing a lot of uncertainty play out, right? And as we sort of go through these waves, even as we see the beneficiaries being increasingly priced in a particular way, there's going to be uncertainties. So what if, right? So back in early 2025, what if the Chinese come up with some really efficient algorithm that makes all of these, extremely power hungry, expensive compute, unnecessary, right? It turns out that is not the case. More compute is actually better, and the scaling law does continue to hold, and we get more intelligence, more quantity of intelligence as we have more compute. Notwithstanding, you want sort of better compute efficiency. To your point about uncertainty, I'd like to bring up a concept that academic economists have, sort of come up with, and that's very popular. It's called Knightshan uncertainty. So knight, right? So think about the medieval English knights, right? So the idea is the following: if I throw a dice, right, and you can know the uncertainty, right? The number is going to come up with 1 to 6, right? It's uncertain, but you know what the range of possible outcomes will be, right? Same thing with tossing a coin, right? A coin flip is either heads or tails. There's uncertainty, but it's also known. Now, Knightshan uncertainty is when the range of potential outcomes are not really well defined, right? So it's an uncertainty of categorical kind, and that brings out a different level of uncertainty, and some might say fear, some might say opportunity. What we are experiencing with the software space, I think, is actually very much of a Knightshan uncertainty kind, right? It is not like we know for a fact that software will be made obsolete. We do not, right? You go on Twitter, you get into this spiral, and people who are very permanently online and they see all these sort of demo of cloud bots and whatever, and they think right away that they extrapolate and think, oh, everyone's gonna just vibe code their own software, or in any event, this poses a threat to people who provide enterprise software. In reality, some of it may be true, right? Some of it is going to lead to a different type of paradigm of who comes on top of capturing the value. But a lot of it, if you go on LinkedIn, I don't know if you've ever gone on LinkedIn.
No, never.
It's almost as though nobody has ever heard of this idea of just bringing some random vibe coded software or internally developed software to displace your enterprise software that has been sort of troubleshot, with millions and millions of tickets to hone out all the edge cases. to create a workflow that really ultimately only comprises a single digit of your OPEX, but you could save it to try to shave off of that margin, or you can devote all of your AI infrastructure to grow your top line. If you are a business, what would you do, right? So I have seen both sides of the argument when it comes to this whole software business, but I do think it is worth contemplating just how this will actually play out once we take a deep breath. Just like DeepSeek was not the end of the world for AI, I hardly think that this is actually going to be the end of software. But I do think it's one of those things where it's going to take a while for that uncertainty to unwind, and people got to calm down, and they realize, oh wow, a couple of quarters later, some of these companies are still growing. The thing is, software, fundamentally, the problem is that they are all very expensively priced.
Yeah.
Right.
Yeah.
The reason is because you like them for the same reason everybody else likes them, because they are very high gross margin. Once you have a software that have product market fit, the marginal cost of supplying that software to a new user is practically zero, right? There is not like as though you're making a car or manufacturing a tank or some sort of a industrial hardware where there's very heavy costs. So software is a great business if you manage to get into a subscription business, SaaS, and just sort of collect that coupon once you get it going. Now, that means that market has priced it such a high valuation, pricing in not just the fact that it has stable earnings, but also rapid growth. So the moment that rapid growth assumption gets questioned, right? When instead of growing 20% a year, you start growing at 15% or 10% or 5%, for whatever reason, if you have a bit of a wobble, right? People sort of take a pause, then that completely shake the valuation of this asset, right? So I think that is a lot of what we are looking at. And within software, some companies are going to be threatened, and some companies I think will be, in fact, I would think, benefiting from AI being, an input.
I like this lightning uncertainty thing. I've heard it from you. You're the first person I've heard talk about it, where the outcomes are there's no parameters, they're unknown. So when you make this comment, right, when you say like, okay, we're hyper exposed to this Twitter bubble that is so just submitted to the algorithm, where it fries our brains a little bit, right? Like the only thing that I see all day is Claude bought this and Claude Code this, and Peter Steinberg this, and this GitHub and this thing, this Claude scale, da da da. But then you go on other platforms, like you go on LinkedIn, and no one has any idea. Or we always talk about, if I were to go down the street in New York City and ask 100 people if they know what ClaudeBot is, or OpenClaw, how many would say yes? And I would imagine it would be relatively close to zero unless I happen to run into an engineer, right? And so my question then is, how do you price that delta? Is it that the tech isn't that good, and if it was that good, then everybody on LinkedIn and all of these other platforms would be talking about it all day? Or is it that good, but the world hasn't caught up yet, and tech Twitter, fin Twitter, crypto Twitter is actually just not 30, 60, 90 days ahead of the curve, and from that perspective, maybe the carnage is justified and will get worse on some of these SaaS names? Like, how do you think about that?
So I think of software is it's not going away, right? Just like remember government bonds. I don't know how often you look at government bonds, right? If you look at TLT, long-term government bond ETF,
Okay.
and what happened to it in 2022, interest rate rose a lot, and government bond value went down a lot, right? And it was probably the biggest drawdown for government bonds for that product forever, right? Certainly in 40 years or something. Basically, the market was pricing in a permanent paradigm shift. What does that mean? It's pricing in suddenly the realization that inflation wasn't going to be low forever. Right? Instead, inflation could in fact be high and stay high for a while. And when you have that, that permanently changes the valuation of government bonds in a big way. So I don't know if I'm able to share screen here.
Yeah, screen share. I can show it. Fuck yeah.
So wait, my screen is still running. We've paused this preview to save your resource. I don't know what that means. I tried to share my screen, but apparently it didn't quite work.
No, if you click
Here we go.
there you
Here
go.
we go. Can you see this?
No, not yet. If you click the little share screen and then go entire screen and show one of your
Okay.
yeah, go share screen and then click entire screen.
Entire screen.
Right there in the middle. I have like when I click it, I have applications, entire screen, or devices. I click share screen.
Oh.
You see that?
It is showing up here on the bottom left. It says live. One second. Let me try one more time.
Okay, if you can't, we'll get producer Luke in here if you can't.
Can you still see me though?
I see you. Yeah, yeah.
All right. Can you see this? I did share entire screen.
No, I can't. Fuck, I want to see it. Let me see if I get Luke in here. Luke?
Can you guys hear me?
Yeah, I hear you.
Yeah, so Steve, click it should be the button that says share your screen. It has an arrow with the screen. So once you click that, what does it say?
It says, I am streaming right now. It says,
oh yeah, you are.
Change screen.
Yeah,
you see
perfect.
it?
Oh, I wasn't
Yeah,
sure.
we can.
It's me. I got it. Sorry.
It was
I had
Mike.
the non-video participants off. Good, cool. Sorry about that. Okay, we're up. We're
Right.
up. Let's go. Fuck yeah, let's go.
So basically, the way I think about it is that software has experienced exactly what happened to government bonds. Now, people are pricing in that assumption change.
Okay.
And we don't know whether that assumption is correct, right? Do we know for a fact that inflation will remain permanently higher than it was over the last decade? It seems to feel that way, right? And interest rate feels as though they will be high, for a long time.
So can you walk the stream through what we're seeing on this chart here?
So here I'm showing you basically nothing complicated. It's just exactly what has happened in the marketplace. I show you over the last couple of years, since essentially, ChatGPT, or I think actually this is actually just over the beginning of last year, 3 indices, right? The B500 large cap total return index, which is more or less the S&P 500. That's the blue line. That's how the market has done. You see how in April we had a big drawdown because of Liberation Day, and since then market has rebounded robustly. But of course, on the surface, some stuff has gone up way more than the market, as you guys have known. But I show 2 other lines just to draw a contrast. The yellow line is the Bloomberg B500 software services. So these are the companies that are providing software services within the index of B500, right? And the other one is the industrial sector total return index. You can see how the yellow line and the white lines are more or less tracking each other until late last year, at which point there was a big divergence, right? And software took a big plunge. That's the yellow line. You see that?
Yeah, right here. It's great. Same time that Bitcoin get destroyed, right? That people have been posting that chart. Yeah.
Yes, and the white line has gone up. Industrials, right, continues to go up, which is part of the thesis I had about how industrial companies will actually benefit in this new era. And it's all about, I think, what is priced in and what is actually, sort of still to happen. And I was joking at one point, I'll show a different chart here, sort of the same thing. Really, I just use different examples where you can use the iShares Expanded Software ETF, IGV, as the representation of software. And you can use the Vanguard Industrials ETF, VIS as representation of industry. You can see how like those 2 lines are mirroring the same thing as the previous chart. But then Bitcoin moves almost in lockstep with Expanded Software. So I was joking, maybe Bitcoin is also software.
It's crazy. Why do you think that is, by the way? I don't know what your stance is exactly on crypto. I know you talk about it a little bit, but that chart I feel like it was surprising to me. I think it was surprising to a lot of people as well. How it moves 1-to-1 with software ETF, IGV.
I mean, when I saw it, I was a little surprised too. I wasn't really expecting it. I know that Bitcoin had gone down, but I did not know that it had moved in lockstep with software. But when you think about it, it's actually, I guess, not too surprising. On the one hand,
Yeah, fair.
when you take really take a step back, is Bitcoin really that different from software? It kind of is code, right? It's code, based money, right? And there is a remote, chance. People have always speculated that, with quantum computing and extremely powerful computing, you could, in theory, crack the cryptography
Yes.
of, Bitcoin. Not that is a realistic, near-term chance. But I think more realistically, what is happening here is just that these two assets are both long horizon cash flow assets. In other words, there's a lot of stuff that's banked into the future, distant future. And when the distant future is, becoming rather unclear in the nation uncertainty sense we were just talking about, those assets, are behaving in a similar way. Now, of course, there's also just general probably rotation. To be perfectly honest, I don't know the exact reason why as to crypto might have moved, like this with software, but it is certainly very intriguing.
So earlier in the stream, I think on your first topic, you made this, I'm gonna like misquote it, but it's something along the lines of what's happening right now is one of the best investment opportunities of the last generation or the next generation, 100-year time frame. And Andrew Kang, I think you replied to his article, wrote this really interesting article, basically laying out the same thesis. That's like, there's obviously downside risk, but the real risk is not being exposed to the right stuff that's going to give you the best financial opportunity of next 100 years. It's a broad question. There's no one way to answer it, and it's the billion-dollar question. But how do you position for what is happening right now with the rapid advancement of AI, what's happening with SaaS, what's happening with this next innovation? Like, where do you, especially if you're sort of sidelined and not exposed at all, like, how do you position for this? You can't really get Anthropic exposure if you're a normal person. You can't get exposure to OpenAI yet. You can't get exposure to SpaceX or XAI yet. How do you position, and what do you look at?
So the way I think about it, when you are in the period of extraordinary uncertainty, you try to go for the stuff that everybody wants. Only you have, at least for the time being, right? That's how sort of in the thematic investing, sense, you get this sort of sudden squeeze. It's almost as though if suddenly everybody develop a taste for drinking Coca-Cola, right, soda, right, nobody, sort of you're just selling it, and suddenly everyone develop a taste for it. You want to be the only company that makes bottles for Coca-Cola or something like that, right? There's a squeeze on what you're selling. If you plot the price chart of like European defense companies, I don't know if you have seen those.
Okay, no, I haven't.
Okay.
European defense companies, you said?
European defense companies. Okay. You can take a look at a company called, let me actually just show you an example, right? So there's a company called Rheinmetall.
Okay.
Let me just show you. So Rheinmetall is a German weapons manufacturer that make tanks and bullets. And look at how the stock has moved. Wow. And the thing is, 5 years ago, so basically the whole thing was kicked off by Russian-Ukraine conflict, right? Russia invaded Ukraine.
Yep.
Suddenly, you have a massive demand for weaponry in Europe because Europe now feels threatened, and the US is also not being completely forthcoming when it comes to military assistance because of its own, fiscal, constraints. And market started pricing in, so the price went from $70 to $200, and then it kept going up, right? Today it's trading at $1,600.
Wow.
Right. And every step of the way, you thought, oh, surely this is too late, right? A year after, Russia invaded Ukraine, early 2023, the stock was $250, right?
My God.
It has already more than,
Yeah.
quadrupled since when it started. And then comes a year later, 2024, right? You think, oh, surely at this point, the war has gone on for 2 years. It's way too late to get into buying European defense manufacturers. And then Trump becomes president in November
Wow.
and starts
Just
saying
keeps
how the
going.
US will not support Europe in the same way that Europe has to fend for itself. And the stock goes from 500 to $1,600.
Jeez.
And now we're in a holding pattern. And depending on how the war unwinds, I mean, you know, the reason this is happening, and some of your listeners can go back to your Econ 101 and you can review this fact that when the supply curve is vertical, because there is no way to expand production and demand goes up, the only way for equilibrium to be reached is for price to go up a lot, very quickly, right? So Europe basically doesn't have a defense industry because after World War II, the US committed to defend Europe, right? In exchange for Europe being, a close ally of the US. And there's this whole institution called NATO, right? North America Treaty, and Europe then decided we're not going to spend any money on defense, and we're going to spend money on other things, on healthcare, on a very generous welfare program, and so on and so forth. And suddenly, out of nowhere, overnight, Europe, has been made, aware that they need to actually have a defense industry. So the only way for things to adjust. The reason I bring up European defense as an example is that I think we're going through a massive change unseen in probably half a century or more, not just because of AI, but because of geopolitical realignment.
Okay.
Right? That you had this idea of, Pax Americana, right? You have a world whose security was underwritten by the U.S., military and defense, and that was the global order. And you had free trade, and you had a very open, liberal global order, and that is changing because the rise of China as a competitor to the U.S., and because the U.S. itself, its own economy has shrunken as a share of global economy, right? So it's no longer able to underwrite global defense in the same way they used to. So I wrote a 2026 outlook on my Twitter. I can share a link with you guys.
Okay.
But one of the things I mentioned was exactly that. You can actually see this very plainly. The US government released a national security strategy document in which it mentions very explicitly that the US will pursue what is called a Monroe Doctrine. There's a lot of historical jargon for your audience, but the point is that a Monroe Doctrine was pursued 200 years ago when the US decided that the world was going to be cut into turfs of different spheres of influence, and the US would secure its own spheres of influence, and other powers would secure theirs. And, so to that extent, you will see more of such involvement of the US in its own home turf, such as Latin America, right? And part of the reason why, US has intervened in, say, Venezuela and other, Latin American countries is exactly an expression of that the US will assert its own, sort of geopolitical preferences to try to create corridor of safe, secure supply chain, so that if the US was to want to bring back manufacturing away from China back onto its own continent or nearby neighboring countries, friendly countries, that you could. And in this process, you're going to find that the US will need to secure natural resources, mines of metals, because to make things, electricity requires copper wire, right? Solar power requires silver, right? So basically, the atoms versus bits argument.
Okay.
Right.
I was gonna ask you about this because I'm seeing this on my feed more than anything. Is everyone is saying bits to atoms, bits to atoms, bits to atoms, and it can be hard to gauge Where are we on that transition? Like, are you too late to expressing a view on bits to atoms?
I mean, I think we're just getting started. I mean, have we really built much of anything yet? I mean, the US right now, we're building a ton of data centers, right? And you already are seeing political pushback because data centers are very power hungry and they drive up costs of electricity. And households use electricity, to power their homes. And in the winter, they use heat, right? So if energy cost goes up a lot, people are unhappy. Voters will want to push back. Nevertheless, the US is going to need a ton of compute. So those data centers will have to eventually be built. And in this process, that's going to create enormous demand on input such as copper, right? Such as lithium for energy storage. Because as you sort of go through these iterations of what is needed, you start getting which stocks, which companies are needed as input. Once you do a few iterations, you realize everything comes down to the absolute rawest materials that will go into everything. So instead of trying to guess whose GPU ecosystem will win out, whether it's NVIDIA, whether it's Google's TPU, whether it's ASICs from Amazon itself or whatever, all of them will use copper, and we don't have enough.
So is that the best expression of bits to atoms if you don't want to play individual names? Like, are you just tits long copper right now?
No, I'm not saying anything like that. I'm just saying that you asked me what bits to atoms mean. That's what it means to me. Is that there is a shortage, a secular shortage to the commodity input into the entire infrastructure, not just AI, but reshoring of US manufacturing, as well as, sort of, I mean, there's also a housing shortage. I mean, what have you, right? So, like, we're almost in a perfect storm. Everything is more or less pointed in the same direction. And it's not just the US either. When I was mentioning to you, Europe needing to rebuild its military, rebuild its defense sector, Europe is doing the same thing. So it's almost as though overnight, right, the major economic blocs, US, China, Europe, Japan, everybody, right, is seeing a massive need to do physical infrastructure, right? And if there's anything in common to all of these physical infrastructures, that they're all going to need a ton of commodities. And there's only so much supply globally, and they all happen to be located in very geopolitically and politically inconvenient places. Like, they are in Africa, they are in Latam, they are in places of the world that have not historically been associated with great institutional stability.
So, okay, I don't know entirely if this is the best way to phrase this question, but how do you, like, what would you look at? What charts would you look at? What data points would you look at to measure where we are on the bits to atoms transition and how seriously it's being taken? Like, how do you see when we hit that like acceleration point? Like, how do you measure where we are on bits to atoms and if it's really being realized?
I mean, one thing you can do is I can find it, but basically you can look at the two lines here, right? The white line that's industrials and the purple line that's or the blue line that's software, and you can do a one divided by the other. And as you can imagine, the last 20 years,
just industrials by software, like 1-to-1.
Exactly, right? And
can these go up at the same time?
They did go up at the same time, but one went up a lot more than the other over the last 20 years, for the most part. Which one do you think went up a lot more?
Software, historically, right?
Yeah, software over the last 20 years went up way more than industrials. And we are just now seeing a reversion, right? A mean reversion. I don't know about mean reversion, but certainly a reversion. And I suspect that this correction is not done, even if a lot of it has, I think, been overdone, right? So things never happens in a straight line. So you see a strong move in one direction, it corrects a bit to, and then it keeps going. So I think that's one way of looking at it. another way of just sort of you can plot, how commodities are actually all going up, right, relative to other asset classes. I don't think it's lost on your audience that gold and silver have gone up a lot.
Do you have a thesis on this? How, maybe like what the implications or the takeaways are of the gold and silver move?
I mean, it's the same one as I said before, right? There's a lot of demand for commodities. So gold and silver, obviously, these two things are surging because of speculation, but is a fundamentals-based speculation, right? Gold started being, sort of driven up because after Ukraine was invaded and Russian assets were seized by the West, by Europe and the US, they had deposits in Western central banks, right?
Yes.
Suddenly that created a precedent that had never been broken before. And suddenly, if you are any other country, not Russia, you start worrying whether or not the assets that you are holding as forex reserves in Western countries are safe. So if you're China, you start converting US government bonds towards something else. And that something else is gold, right? I mean, I guess they, in theory, could wish they could trust Bitcoin, the digital gold, but
we're not there
Bitcoin
yet,
has
no.
not proven we're not quite there yet.
It's too small
So
as well. It's too small, right? Like
they're a little bit more old-fashioned, so they bought gold.
Understandably.
Once they started buying gold and other central banks started buying gold, gold started going up and people start seeing gold going up. So other people start chasing, and before you know it, they turn to a trend. So gold went up and people start asking, so gold has run up a lot. What else is precious metal? So you start thinking about, by association, silver, platinum. So other things are basically, well, uranium is not a precious metal. Uranium is a highly radioactive input into nuclear energy.
But following on the same curve, right, of like beta exposure to on the back.
Yeah, I mean, it goes back to the idea of bits and atoms, right? Uranium, literally atomic energy input. So to the extent that, I wish I had some time before our chat to put up a richer deck. One thing you can look at is you can look at the charts of electricity in the US, how for many, many years, price of electricity was very stable, going sideways, right? That's because the US didn't really grow its manufacturing sector. In fact, the manufacturing sector was in decline. Industrial energy use was, not significantly growing. Household energy use is highly constant and predictable. And over time, actually, energy efficiency, means that you don't use as much energy. And more recently, over the last couple of years, electricity prices went up a lot, right? Outpacing inflation. And the reason is that AI has created an enormous amount of energy demand. And we're just getting started. Think about how all the data centers that are still in the pipeline, So, and we are not even talking about bringing back manufacturing, which some politicians are talking about, like the Trump administration are talking about bringing back manufacturing of iPhone to the US and so on. So with all of
could long energy just be your expression of this trade for the next decade and do nothing else?
What kind of energy though? I mean, it's not going to be, so how do you generate electricity? People historically think about energy as being oil and gas, right? But actually, electricity is generated, using a mix of different sources. Traditionally, coal generation is the oldest, and China use a lot of coal, but you have renewable energy, solar and wind. In fact, if you look at solar and wind power, stocks, since President Trump's re-election, they have gone up way more than you might have expected, even though they've been talked about as though they're moribund, because there's just massive amount of energy demand, and we are trying to get energy from everywhere. And you were mentioning Ukraine. You mentioned uranium. Uranium has gone up a lot, and so have nuclear energy stocks. The reason being that there's expectation that the US will have to restart and start building a lot of nuclear plants. And Japan, by the way, same thing. The Japanese election we may get to later, will have implication about Japan restarting its own nuclear energy many years after Fukushima, nuclear accident. So And Germany, by the way, which shut down its own nuclear energy, now is feeling rather sorry because now he has lost cheap energy input, natural gas from Russia, and yes, now such expensive energy that is unable to power its industrial economy. So I think everything is pointed more or less in the same direction. It's just that things don't move in a straight line.
Going back to the gold thing really quick,
Yeah.
could you justify gold as a leading indicator for the bits to atoms transition? And if gold stopped going up and started depreciating rapidly, you could long software again? Like, how correlated do you think gold is to bits versus atoms?
I think these two things are a little bit separate in my mind. I mean, sure, there's a meme we can talk about like bits to atoms. I think generally that says more about atoms than about bits. I don't
Okay.
think you want to be short bits per se. I mean, we're still in a massive, technology, transformation, and tech hyperscalers, right? The Mag 7 stocks are still among the best performing. And if you look under the surface,
Yeah.
a lot of technology companies are doing really, really well. Software is not all of tech. Software is just currently under some pressure. But I actually do think software is one of those things, just like I said before, with DeepSeek, will actually have its own, I think, recovery as we realize that not all software will be actually vibe coded away. And in particular, I like this quote that I read from a Substack that I quite like by Tech Fund.
Okay.
He's on Twitter as well, and he
Okay.
just wrote this new piece. And he says that there's a big difference between code that's good enough to run on your local machine and code that you can actually ship to run crucial enterprise workloads on.
Yeah, that's a good take.
So, you want software for enterprise use to be secure, to be highly reliable, and to be scalable. Presently, the code that's written by AI is none of these things. Maybe eventually you will get to a point that you become such thing, but presently, to get to that kind of stage, it takes a ton of compute tokens, such that it's not really worth your while. And once you've done that, you've written your own software to do something that's just as good as the enterprise software. So now you've wrested back control. Guess what you got to do? You got to now hire and maintain a group of engineers.
Yeah.
And what happens if they quit on you?
Yeah.
You are suddenly stuck with your own, coded software that you got no way to troubleshoot. So I am quite skeptical that companies will actually just start developing en masse their own software when they can get it directly off the shelf from software companies. They can provide it to them at a cheaper cost because of economy of scale. What is likely a bigger threat to some software companies is that they become less powerful in terms of their pricing power because they become relegated as toolkit for AI layer overall, right? So you imagine you have an AI dashboard and you can just interact with the AI model in English, and the AI goes and calls on this underlying software to perform whatever purpose functions. I can imagine a scenario in which some of these software companies will lose their ability to upsell their other features and command, rich pricing. So that could hurt some software companies. But I think some software companies are also developing very rapidly, their own AI capabilities, such that they actually can maintain, in fact, become strengthened by this AI, I think, evolution. That's, I think, why I have this screenshot of the CEO of Databricks, right?
Okay.
Databricks is Databricks,
Yeah.
right?
Yeah. Let me pull it up. Go, I got it here.
And I think one of the most valuable privately held tech companies and software company, and they have a platform for hosting data and various types of compute resources. And they just reported their quarter, and here they said in Q4 they had a 65% year-on-year growth on revenue, and they are also now free cash flow positive for a private startup company. And the biggest reason they attribute their growth to is, in fact, AI, which was not even in their sort of core offering in the beginning, but they built it out, internally, have the foundational model. So now, instead of directly interacting with data, which most people are not capable of, right? Most people don't know how to code.
Yeah.
They find it intimidating to interact with spreadsheets of
Of
numbers.
course.
They find it intimidating to actually even think about coding. Now, AI has made it possible for you to code, quote unquote, right, with English, right? You just directly ask in the prompt, say, hey, can you look into the data? What has actually contributed to my latest quarter's, revenue growth? Which part does it come from? Draw me a histogram of XYZ. Give me a trend line. Draw some, do some statistical analysis. Interpret the results for me.
Yeah.
So on and so forth. It is very empowering. You can imagine, right? Such that he gave an example where he didn't know why they saw such robust growth, and he just, instead of previously would have had to ask his finance department folks to do some analysis that would have taken days, he just asked his AI model and he returned the answer within minutes. So if you are a software company whose only purpose is for financial reporting, right?
Yeah.
You may be in trouble.
Yeah.
So I think it depends. I think if you look at the overall index level, it's going to be masking the fact that some are massive beneficiaries and some are going to be big losers. Just depends on how quickly they respond to AI as a shock.
Okay.
If you are a financial reporting company that incorporates, AI tools, right, and allow their users to do quick, rich analytics, I imagine a lot of small companies, medium companies are very happy that they suddenly have this ability to interact with their data and not have to pay an accountant.
So are you running a Claude bot, OpenClaw, on your computer?
No, definitely not.
Claude Code?
I mean, that I do. I mean, if you are a, I think quasi-quant person these days, if you were previously coding at all, you are using, AI to help you code. Yes.
So why don't you use the Claude bot? You're a
Doesn't
step
really do
behind.
very-
Low-key a step behind,
I mean, it doesn't really do that much for me. Like, what does it do for you?
Well, at this point, it's kind of doing everything.
Okay.
Mostly on the content side. So it's
Okay.
pulling so it's doing research on you, right? It watched your last 3 interviews, pulled your last couple hundred tweets. What are you most interested in? What topics are related to you? And then it will so what I have it doing right now is when we're off stream, it'll transcribe the stream, compare how I did in this interview to prior ones, compare other topics I talked about in other ones. And then it will also, for like the day today, anyone who's adjacent to where I talk about crypto, finance, markets, what did they talk about on their streams today? What did you miss? Where did you cross over? What do they do better than you? What did they cover you didn't cover? What did you cover that they didn't cover? And sort of get like the content landscape of like what happened in crypto, AI, finance of the day. And so it's locally focused on content right now for sure.
I think what you just described is perfect, right? In that, I think Clawbot, OpenClaw, whatever the latest name is that is legally permissible, is perfect tool for what you do, right? You have these needs to actually compress a lot of, I think, text data, right? Contextual information, and for you to organize and then in a timely fashion analyze. For my purpose, for what I do day to day, it doesn't really quite help me yet. And for me, the cost of potentially having a security, leak, right, outweighs whatever, like I don't have the use case that you have. I'm not running a podcast, right? If I was running a podcast, I would imagine. So I think part of what we were talking about before with software is exactly like this, is that I suspect the AI space is going to become more and more differentiated, where the big foundational model labs, right, OpenAI, Gemini, and Anthropic, they're just going to offer their powerful model, and that's just their model. But then sort of there will be, wrappers, iteratives based on them, right? Where OpenClaw doesn't have its own foundational model. It calls these foundational models and uses their tokens to do something different. It performs a different service for you, right? have need for this particular type of service, and I do not. So, and I think you will have more and more of such things. So I suspect that it wouldn't be very long until Claude will come up with something that is much more sort of
Okay, so
involved.
we established on this trend that commodities are going to be increasingly important and potentially increasingly more valuable. We talked about copper, talked about energy a little bit. How do you what is the best expression of more people are going to use AI models probably to code and to do day-to-day tasks when you can't, for the average retail person, get exposure to the models themselves?
I would look up a diagram of data centers and how a data center is constructed, and look up all the individual components and the suppliers of each of those individual components, right? AI investing, I don't know how you have been doing it over the last couple of years, has never really been about investing in AI labs. Even if they were offered to me, I don't know if I would necessarily have jumped on investing in those, shares. Maybe some, but the biggest winners have been, just like I said at the top of the hour, the random little components, whether it's some network cable or some gluing agent that glue the memory onto the GPU chip. The most boring random suppliers, right, that were previously catering to the semiconductor industry, that were previously catering to the manufacturing of phones, PCs, tablets, and what have you. They just suddenly saw a massive demand squeeze. You saw what happened to, for example, the stock price of Micron and SK Hynix. Right?
Micron,
All the memory, SanDisk, which is another company.
Insane.
So those things all went vertical because of the reason I mentioned in the context of Rheinmetall, the tank maker in Germany, right? Because demand suddenly came and there is no supply, so price has to go vertical, right? So I think if you believe, as I do, that with AI agents, that the amount of compute that will be needed, just as you are happily using your OpenClaw day in, day out, is going to dramatically multiply the quantity of compute and tokens that was previously projected even just a few months ago, then I will be, I think, finding every opportunity to be, I think, exposed to the components, to the suppliers of the AI or data center supply chain, right? So I can't possibly list them all.
Yeah, of course. I just wanted to hear you thought. That was it. That's what I wanted.
But I would just look up a schematic of a AI data center and see what goes into it. And basically, it's several layers, right? There is the chips, GPUs, various kinds, whether it's the NVIDIA paradigm or Google paradigm. There is testing, right? Because once you make the chips, what is obviously TSMC, right? That's the manufacturer of the chips. And then you've got the testing companies that will test the yields, right? To make sure that the chips are actually good, right? Now we're talking about really specific random things. You're buying a company whose entire purpose is to test chips. Right?
Chips, yeah, it's a whole different world. Yeah.
Now you're buying companies that nobody has ever heard of.
You're like really in the weeds then. Yeah.
Right. And that's why AI helps you. You ask AI to give you a list of the value chain of AI. And you get that list, and you get into basically energy, right? When you build all these data centers, we're talking about tens of gigawatts. I mean, people need to get a sense what that means by asking AI. Like, that is an unimaginable amount of energy, right? To build that kind of energy, you need specific companies, right? And the reason why GE has done so well post spin-offs is because GE has a nuclear energy arm, right? Right. You've got other companies that are in the energy infrastructure that helps you basically put together, energy network, right? Because it turns out, if you want to have this huge, facility that consumes a ton of energy to draw energy from the electric grid and to generate your own, and you store your own energy, all these things is going to, take a lot of expertise. Transformer, by the way, transformer, right?
Okay. Like generally, yeah.
That's there are two transformers that are very important to AI,
Okay.
right?
Okay.
There's the LLM transformer, right? That's the name given to the algorithm that does the prediction. There's the OG transformer that transforms high voltage electricity to low voltage electricity, right? So energy, when it's transmitted from the source to your local use, has to be transmitted at super high voltage so that it doesn't lose a lot of power along the way, right? And that transformers, those things are made in Europe by companies like Schneider, ABB, companies that are industrials, right? And they are out of stock for the next few years. So that's how I think about it. Basically, look for things that you have, people want, and only you have, and yeah.
That was a sick answer. We got some homework to do. Okay, one of the last things I want to ask you, and I gotta let you kind of go pretty soon here, is kind of a generic question, but how do you think about the concept of the AI bubble and like timing or trading within the bubble? So my trading experience, I've been trading since 2020, but primarily crypto. And so I really have only lived through the boom and bust of FTX and through 2022, 2023. I was like 6 in 2008. So I didn't trade the housing collapse 2008. I didn't trade the dot-com bubble. And obviously the one thing everybody says when they say AI in the market, the next thing they say is the bubble. Can it get bigger? Is it going to pop? How do you do you have like a framework to think about that, where we are in it, how you would value how much further things can go before they have to get worse, metrics, data, whatever? Like, how do you think about it?
So, I mean, fundamentally, a bubble is when you eventually come to a realization that you overbuilt, right? And there is more supply than there is demand.
Yep.
Bubble doesn't just collapse, because the stock has gone up a lot, right? I think it's useful for if you're young, right? You should try to either ask AI what was really like during the dot-com bubble, right? Or ask someone who has lived through that bubble. I've never lived through that bubble, but I've done the exercise. The dot-com bubble was substantially crazier than anybody who has not lived through it will actually know, right? Things went absolutely insane. Companies that did absolutely nothing will see their stock skyrocket simply because they put a word .com in their company name, right? Things that have nothing to do with the internet were going up a lot because it was sheer mania. I think we are in a big technological transformation, but it has been actually a very slow burn with plenty of skepticism along the way. If you walk into your barber, right, which is the very sort of classic example, if your barber was pitching you AI stocks, you're in the bubble.
Yeah.
I walked into my barber recently. He didn't know anything.
Really? He did a good job, by the way.
Sorry?
I said he did a good job, by the way. Yeah.
Thank you. I think part of the reason why is because AI is very wonkish. AI is very complicated because it's happening on the supply side. As I was explaining to you, the supply chain of what goes into building a data center, you didn't know any of that stuff.
Yeah.
And it's hard to get excited about something that is complicated from an engineering point of view. It's easy to get excited about crypto because it's just about a number that goes up or go down, right? There's not much to know.
Well, yeah, generally, yes.
Well,
I got you. I got the point. I got the point.
So I think we are still, I would say, 2023, I tweeted that there was talk of a baby bubble in AI. I said I was super excited because what happens to babies is that babies grow up, right? So if you hear word of a baby bubble, jump in, right? I think there's a lot of skepticism, and people are all like, "Oh, .com, and bubble bursting any moment." I think we are more in a violent adolescence moment, right? Where I think the bubble is about as old as you. Now, aging is not linear, though. As you get older, aging seems to happen faster. Nevertheless, I think there is potentially more to go. Let me show you a piece of data
Okay, show me.
to tell you why. This is the price of the rental price of the NVIDIA H100 GPU.
Okay.
Right, and I'm quoting here the data index from this company, Silicon Data, which is a friend of mine's company. And over time, as you can imagine, the price of compute goes down because of technological improvement and so on. And indeed, it was going down for much of 2025.
Straight down.
But more recently, it has been rising rapidly. Why is that? You know what happened when that little spike happened?
Okay, what happened?
I'll give you a hint on this picture.
Oh, is it DeepSeek? Oh, okay.
It was the release of Claude.
Got
Opus
it. So there's like
4.5.
a step function growth in demand for these things, or
So
it requires
just
more
like
compute?
exactly, Claude basically introduced for us the first time the idea of how you actually have AI agents do things for you, right?
I see.
So the first AI moment, the first moment that shocked everybody was ChatGPT in November 2022.
Yep.
You have this human-like chatbot that you can talk to. I would say the second ChatGPT moment was exactly Claude,
Yeah,
right?
definitely Claude.
And Claude completely widened the AI game.
Yep.
And turned it from one-dimensional into two-dimensional, and suddenly you have a lot more compute demand. And that's the reason why the price of compute is going up. And that's also why memory and storage stocks are going up. That's also why spot price of memory, right, is going up like crazy. Just because we have a lot more need for compute.
You know
So
the thing about the barber analogy as well, because I think it's a good one, is that the one difference with your barber telling you about Ethereum versus showing you a data center stock is that your barber is probably using ChatGPT, right? Like he's definitely using AI. If you ask him that question, are you on ChatGPT? Definitely has it on his phone, but he is probably not directly invested in it. There's like a layer of separation there for sure. Like I would imagine he has ChatGPT on his phone.
I'm sure he has ChatGPT on his phone, but I'm not sure he's really interacting with it much more sophisticatedly than he was using Google search. And that's, I think, the biggest difference is that I say, for the most part, ChatGPT has not really genuinely penetrated. People are using it in a very superficial, trivial way. And I think AI agents, such as what you're currently doing with OpenClaw, is really creating a new UX for a lot of people that is going to massively expand their deepen their usage of AI, and that means a ton more demand for tokens.
Yeah.
Right. So one could argue that we are, as much as like now we're talking about $500 billion and $600 billion, capex by the hyperscalers plus everybody else, and this is just in the US. This is probably not even enough compute a year later, because we are, I think, just getting started when it comes to this new paradigm of computing. And I think the opportunity and the risk lies in exactly the Nation uncertainty that we spoke about at the top of the hour. We don't know, right? There's a very, very big range. And the reason why, if you pick any random AI picks and shovel stock, the reason the stock goes like this, right, is because we keep updating, right, that parameter of how quickly things will grow, right? And depending on where we are on that number, things can suddenly look, scary, on one side or the other. And I think that's basically how I would assess this AI bubble thing. I tend to, I swing between, right?
Okay.
There are days when I
You
think,
do
oh, this
swing,
thing
by
that,
the way. You swing.
I mean,
You wake
you
up
have
some
to.
days and you're like, fuck it, I'm a bear today, you know?
Well, I don't think I do that very much, but I do think some days you do feel like things are getting a little bit out of hand. But I think that's also partly because financial markets, is reflexive, right? It prices in market prices feed into decisions in the real world. Companies make decisions off of their stock price and seek a signal from the market as well. So it's bi-directional. Yeah.
I love it. Steve, you're one of the
By the
best.
way, I do want to mention one more topic if we have 2 minutes.
Okay, go. Fuck yeah, of course, go.
I do want to mention one more thing because you did mention Japan.
I did.
Right? And Japan just had an election. I think it's a very interesting pattern. I don't know how much it will mean to your audience, but let's give it a try. Japan is a very curious case, and these are charts I pulled from FT, Financial Times.
Okay.
If you look at the debt to GDP ratio of Japan, it is the highest in the world.
Okay.
Massive amount of debt the government has run up. And you look very worrying until you look under the surface and what Japan has been doing, and why Japan has not had an outright financial crisis, even though interest rates are rising and they have a ton of debt, right? Over 200% of GDP, debt to GDP ratio, right? And the reason it turns out is because the Japanese government, much like the rest of the financial sector, has been running a massive carry trade.
Okay.
Are you familiar with what is a carry trade?
I am familiar with people talking about it, but I've never participated in the trade.
Carry trade is basically very simple. Carry trade is if you see somebody lending money very cheaply, you borrow it and you invest in things that is going up.
Because you've been able to borrow it like 0% for 20 years.
Right.
Japan, right?
So if you borrow money in Japan and buy Bitcoin, that's a carry trade.
Okay. And you've been able to borrow for free for 20 years, and you no longer
for a
can.
long time,
right?
Yeah.
Okay.
So carry trade is very popular, and the funding lag globally has famously been Japan.
Okay.
It turns out the Japanese government was doing the same thing as the Wall Street Bros, and they were borrowing money on the one hand and investing in assets, stocks, and also FX, and they have made a lot of money.
Oh.
Yeah. They have made so much money that they can actually just draw down the gains from their investments to pay for their, fiscal problems from interest rates and deficits and so on. So anyway.
So what are the second and third order effects of what's happening in Japan right now? Like, how does this impact our markets?
Stock market is going up a lot in Japan and will probably continue going up.
Okay.
That's the implication because the new Japanese prime minister who just won a landslide election has a massive mandate to now run on her platform of, I think probably similar to what is kind of in the US, a very conservative, agenda, shall we say? And she is very hawkish on defense.
Okay.
And she's very aggressive when it comes to wanting to invest in Japan. So you can see how the same themes are, rhyming. So Japanese industrials, Japanese defense, and so on. By the way, you should look up this stock called Hyundai.
Say it one more time.
Hyundai Heavy.
Okay.
Hyundai Heavy. I'm plotting it next to Caterpillar.
Let me see. Whoa, this is insane. You love Caterpillar, don't you?
I mean, I just made a point about how heavy industries are, I think, going to make a comeback, right? Because they are sitting on so much industrial data, and there is so much inefficiency to be, I think, improved upon with AI that it is, I think you mentioned this earlier
This is
before
the
I got
world's
on.
largest shipbuilding company and a major heavy equipment manufacturer, South
Yeah.
Korea.
So people should read my outlook from 2026 outlook. Part of the reason why is also because if the US and China are going to compete militarily and the US wants to patrol its own waters, the US needs to go remember how to build ships again. And the US doesn't remember anymore. You're from Virginia. You know Chesapeake Bay,
Yeah,
right?
hell yeah, I know Chesapeake Bay. It's my territory.
And that's a major US shipyard, and traditionally where a lot of ships were built. But over the last 40 years or so, the US has lost its muscle memory when it comes to building ships. It doesn't build ships anymore. Korea still remembers how to build ships. So the US is going to need the help of Korea.
So you're
build ships.
you're long shipbuilding, huh?
I think shipbuilding seems like a right category.
Okay.
If you were thinking about where the world may be headed.
Okay.
So anyway,
thank you for that.
Yeah.
And before you go, any other tickers you really like? Drop a couple more.
I'm not saying to invest in anything.
No. To like look at on stream. We do research streams all the time. Not to invest in, just to look at.
I think these are interesting things to look at, and you can look at my
We'll do the outlook 2026.
You take a look at my outlook, and you get a sense of, and ask AI, right?
Okay.
What each category will contain, and I think you'll get a pretty good sense. But generally speaking, I do think we are moving towards heavier things, physical things, whether it's copper lithium miners, whether it's shipbuilders, whether it's tank makers, things that were very much boring to your generation, certainly not even remotely on the radar, are actually increasingly becoming more and more important. And by the time you read them on the headlines of newspapers, I think, things will have already happened.
That's why I have your Twitter noties on, Steve. Read everything you write, man. We'll do the outlook on stream for 2026. But man, we covered a lot. We're gonna have to do a part 2 at some point here. Maybe I pack my bags a little bit, get some positions open, and we come back and do some more boat posting. But dude, it was an absolute pleasure. I really appreciate you coming on. Is there anything that you want to shill, direct people towards? Shout out to the audience. Anything?
No, I have nothing to show. I just appreciate the opportunity to have a chat with you about some stuff. And I look forward to chatting again.
I look forward to it as well. Steve, it was an absolute pleasure, man. You're awesome. Thank you for the time so much.
Likewise.
All
We'll
right,
speak
brother.
again soon.
Have a good one. Peace. That guy's a movie. Was he big bro me the whole stream or no? I was getting big broed. I mean, dude, my biggest takeaway from this is that maybe you can just, maybe it just is that simple. And we can just find a couple and go through the data centers and what it takes to make run these data centers and build these chips and find some little inefficiencies, and we could just stay long. Why would we go short compute? Because you know what's interesting? Even if the bubble popped and OpenAI and Anthropic and all these models got marked down, it got too crazy, they raised down rounds. The thing about the dot-com bubble is that we learned this. After the dot-com bubble popped, users of the internet was still up only. While NASDAQ and S&P and everything got destroyed, the users of the internet was still up only. And so even if these model companies or cloud provider, even if a lot of these stocks stop going up, people using AI is just going to go up and to the right forever. And so why wouldn't we just be long compute forever? It can't be that simple, right? I don't know. I don't know. Is that a valid take? Like, we just giga-long compute? What's the cleanest compute expression? All right, wait. I'm gonna, right? Like, 'cause there's this graph. I'll try to find the graph. Maybe some of the counterpart team has it. And it's I'm telling you, it's showing. I think it's 2002 dot-com bubble pops to 2004. It goes down only. The S&P went down like 40%. And users of the internet were up only. More people are using the internet as stocks are going down. And so if we took that exact analogy and we're like, all right, obviously more people are going to be using AI models than less over the next 2 years. Wouldn't we just want a long compute forever? What's the cleanest expression of long compute? I don't know. It's interesting. That was really fun, actually. I think he's a smart guy. I enjoyed that type of framing and discussion. I have a video I want to watch. He said go back and watch the .com boom. And so I have a video from the 1999 .com boom we're going to watch. I'll be right back. Frank, we gotta get in the lab, Brody. We gotta get in the lab, Frankie. All right, he said watch the video on the .com bubble. How crazy it was. So, I have one. Let's watch it. America's internet trading boom. What was it? 15K views. The internet money machine.
Nicholas Burbis was a 24-year-old waiter.
All right, fine.
Nicholas Burbis was a 24-year-old waiter, wiping tables in Manhattan when he borrowed $3,000 and launched himself onto the stock market. He had no experience, no help, and no broker. Just a lone computer and iron nerves. Now 25, Nick has his own apartment block and, of course, the shiny new...
Say apartment block? The waiter had $3,000, open a Robinhood account in 99. He has apartment block? Is that a Ferrari? What's he driving? Corvette?
Corvette.
A block? Is that what it said? Apartment block?
Now 25, Nick has his own apartment block and, of course, the shiny new Corvette.
Is that New York City? How much is the average apartment block in New York City?
I started out with 3,000, and currently I'm up to 500,000.
Is this your version of the American?
Out front of the the interview on the car, bro.
Dream?
All my friends tell me so I would say yeah.
Is this your version of the American dream?
All my friends tell me so I would say yes.
Bro, you're not buying no apartment block with 500K, by the way. I mean, you get GG on the trades, but there's no fucking apartment block. Wait, what's 500K 1999? $2 million? It's a buck. It's a mil.
a turbocharged economy, a raging bull
Although 3K to 500K, there's nothing people doing that right now in crypto.
market, and forecasts of more blue sky ahead. The good times are rolling in America, and leading the charge, as ever, New York. The red-hot heart of American capitalism, where they're all talking about a new industrial revolution, driven by technology in general and the internet in particular.
Basically, at this point, KTC, it's up a half.
Like the steam engine which sparked the industrial revolution of the late 1700s, the internet is changing everything it touches. And at the cutting edge of the revolution is Wall Street.
So we are now 6 3/4 points above fair value.
No one's absolutely sure where it's all headed, but they all want a ticket on the ride. From the working traders
When you're on top of that wave and you're surfing, you got to ride it to the end, and that's what you're on right now.
to the new breed of cyber millionaires,
It's just that you are shaping a
The new breed of cyber millionaires.
completely new universe. That's probably one of the biggest socioeconomic changes that's ever hit the planet.
and the most respected.
Completely new universe.
It's funny because it's like exactly what we're talking about. This is what the Kang article reads like.
That's probably one of the biggest socioeconomic changes that's ever hit the planet.
And the most respected economists.
If you don't get on this technology boom, if you don't compete, if you just kind of look around and resent that you're falling behind, you're going to just be left in the dust. You're going to miss the whole thing.
Time is a flat
A couple
circle.
other companies to keep an eye on this morning. We've got an alliance to tell you about in the drugstore internet space. Rite Aid is going to own 25.3% of drugstore.com. Rite Aid
Scott Friedman is at the vanguard of the new revolution.
They're going to own 23% of drugstore.com.
No one asked one. No support. Who's the man? Anyone holding it?
Friedman is a day trader, the purest form of stock trader in the world. He's also a millionaire at the age of 27.
Did you sell any? I signed.
From a converted office in a Park Avenue skyscraper, Scott and 150 other day traders rent the latest digital technology to bypass traditional stockbrokers and trade directly on the markets.
Down 1 1/8 on Yahoo.
They feed off the volatility of high technology stocks, traded not on the big board, the New York Stock Exchange, but on the younger, nimbler exchange, the NASDAQ.
$10.50
This is literally the pump fund trenches. This is literally pump fund. There's like 20 of them in a room trading new pairs. They're deadass trading new pairs.
This is at the very low end of estimates. They were going to go from $10.50 to $13 a share.
Speed is
That kid is Cupsy, has an M at 27, except Cupsy has like 100 M's at like, I don't know.
everything.
Same age.
Scott holds his stock for, on average, 4.5 minutes. Today,
Dude, it's fucking trenches.
This is at the very low end of estimates. They were going to go from $10.50 to $13 a share.
speed is everything. Scott holds his stock for, on average, 4.5 minutes. Today, he has $120,000 in play, and it doesn't take him long to turn a profit.
I bought 1,000 shares at 11.09 at 27 1/8.
Scott Friedman has the advantage of the newest, fastest technology, but he's not alone. Around
Bro,
the
this is deadass Cupsy on Axiom. Buying like 8% of the pre-bond.
country, 8.5 million people are using their computers to play the market.
I sold another 300 at 3/4.
The trend is sending an already booming market through the roof.
So I've made money on the trade. It's being my own boss. It's living the American dream. I make my own decisions. I trade my own money. Being my own boss.
No. Is this him? No, this isn't him. If he followed me, I would get him on. There's no way that's him. This guy's too young. Fuck.
It's living the American dream. I make my own decisions. I trade my own money.
Bro retired, he's off the fucking grid.
Contrast the old way of doing business on the New York Stock Exchange.
It's 2002 only. They give them 14,000, 2002.
The pits, bro. Oh my god, the fucking pits.
Venus is looking 39 and about 35,000 if you want to buy 10 grand.
Dot 5,000. What is 3,000? 14,000 dot.
For more than 2 centuries, America's mightiest companies, GM, Coke, Boeing, have listed on the big board. Its stock value today is $12 trillion. Though, interestingly, the leaders of the new industrial revolution, the high-tech giants like Microsoft and Intel, are not on the client list. They prefer NASDAQ.
50,000 base sells in big orders. Sold.
Easing the sting of competition is the big board's own spectacular performance. Its key indicator, the Dow Jones Index, seems to have shrugged off gravity.
The US has been mostly straight up. You know, it was about 20 years ago, it was the 60s really, that you know, we just seemed to be stuck at 1,000 or below 1,000 on the Dow in the 70s. And then the great bull market started in the early 80s, and it really got going in the early 90s. I don't think the market's going to go back down to 1,000, 2,000. Could it see 7,000 on the Dow now that we're almost 11,000? Yeah, it could. But then it'll probably see 15,000 by 2005.
15,000 by 2005.
Yeah.
That's your, so another, what, 50% gain?
Yeah, another 50% gain, I think, is actually a very conservative forecast. And that's mostly because I think that the market is a little overvalued and is due for correction. But I think we are in a great bull industrial revolution for the global economy and a great bull market in stocks.
Stevie, Bank in New York.
It's crazy because
35 and 3/4 leaves me a half for 200.
50K now, by the way. Yeah, it's crazy because everyone on Twitter basically is just bearish. Everyone's just, there's actually not that many people saying like, there's not a lot of people like predicting we're gonna fucking triple. Everyone's just fucking bearish.
26.7. Merrill Sol, Penny Weber offering 136.
Right, Boston too.
That gets him halfway home. If Goldman Sachs shows up as a seller, I have to know he's working a large order.
And this is one of the biggest bull pits, the trading room of Deutsche Bank.
Kevin, below 5 Goldman Sachs, I think using a good size.
Steve Curtis has been trading for 20 years, offering his institutional clients the traditional full-price knobs-on service. Buyer to broker.
Rocking and rolling today, Sammy? Yeah, much better.
The buy order goes to the floor of the New York Stock Exchange. It's the time-honoured way. But times change, and competition with the online traders is becoming intense.
What's that? Take another million. Yeah, compact.
A titan like Merrill Lynch, which until recently sneered at the online trend as a flash in the pan, has already buckled. Deutsche plans to introduce its own online arm soon for individual traders.
It sounds like crypto. They're going to introduce their own online arm soon. All the banks are like, fuck it, we have to do online now. It's insane.
But like many other big players, they
circle.
aren't thrilled about the change.
Oh, that's not nice.
There's no reason for a traditional broker, not with today's technology.
Oh, it's a, you know, for first-time traders, it's a rude awakening when you're buying something that goes up every day, and all of a sudden you start losing real money.
Just because the last 5 years have been up, it hasn't been every day the same. You know, the market goes up, you buy, you hold, you sell. You know, every day is different, and we have to adapt to it.
Lehman Brothers did blow away earnings expectations, so that may very well change.
But will they adapt? Accustomed to a rising market, will these talented amateurs know what to do when the market turns down? Such is the intoxication of this current boom, the very idea is quickly dismissed.
I'm not normally described as perverse, but you've got to be perverse to say the market's going to crash. It may correct, it may have a major correction, but with low inflation, low unemployment, low interest rates, strong corporate earnings, I would be a certifiable lunatic if I said the market was going to crash.
$19.99. Wait. What did I do to my chart? Why is it retarded? Wait, why is it being retarded? What happened? Is it me? There we go. All right, lock in, lock in. 1990.
Going to crash. Unemployment, correct? You've got to be perverse. I'm not normally described as perverse, but you've got to be perverse to say the market's going to crash. It may correct, it may have a major correction, but with low inflation, low unemployment, low interest rates, strong corporate earnings, I would be a certifiable lunatic if I said the market was going to crash.
The Frank D gods in 1999. Okay, wait, let's look at it. How long? It went down. How much? Minus 50% over like 3 years. There was a few bounces, but not much. Then we bought them fucking hard and we were gone. We basically bought them went up only in 2008. Oh, let's watch a couple more minutes. It's so good. Couple more minutes, couple more minutes.
You could well call Richard Quest eccentric, but no one would ever accuse him of being certifiable. Over the last decade, the BBC's US business reporter has covered the stock market crash of '87, the jailing of Ivan Bursky, and the spectacular end to such former masters of the universe as junk bond king Michael Milken. And now, from his perch high above Manhattan, Quest watches the new era.
What you've got now is that this money machine, the internet, the information technology revolution, it's a hell of a mouthful to say. But
it's that's the white Frank in 99, bro.
Money machine, the internet, the information technology revolution, it's a hell of a mouthful to say, but it's a very profitable mouthful worth saying. The money is flooding out of Wall Street like the dam has burst. It is going into every nook and cranny, every avenue and street, every restaurant, every clothing store, every apartment hunting building, every limousine company. This is not a fad. This is a revolution underway that's affecting the way we do business and live our lives. And that's why it's so profitable.
I can't tell if we're actually there right now or we're not here yet. Does that sound like what is being said right now? Also, yeah, the point is he's not wrong. Like, he's actually right. This is the one thing, is he is right. It's just the timing is a little bit unfortunate. He was a little early. Are we in this same... Is this how people are talking about AI right now?
Cranny, every avenue and street, every restaurant, every clothing store, every apartment hunting building, every limousine company.
Every limousine.
This is not a fad. This is a revolution underway that's affecting the way we do business and live our lives. And that's why it's so profitable.
I mean, this is how I talk about AI.
We'll coordinate some deals in LA.
Okay. These t-shirts you can ball up into a little...
I would like to
You can use as a weapon?
It's like some sort of Nerf ball or something like this.
In the revolution underway, these are among its very casual leaders, and this, its rather grotty headquarters. Todd Kreiselman and Stefan Patenaude are the co-chief executive officers of theglobe.com, an internet
Okay.
Site which takes the familiar notion of a town hall meeting, bringing together people of similar tastes and interests, and thrusts it into the cyber age. And the whole world can attend.
The Globe posted the largest first day gain of any IPO in history. Wait, what? November 13th, 1998. The Globe.com took Wall Street by surprise with its initial public offering this morning, blasting out the gate with its first trade of the day at 87 a share, a 9-fold increase from its target price. The IPO ended the day by posting the largest first day gain of any IPO. By a lot. The Globe raised $28 million. It's like a financial fantasy world. It's like someone played a Friday the 13th trick. This is an IPO that was ignored and it comes back with a bang. It's all that internet mania stuff. Wow. Holy fuck. What happened to the Globe.com? Classic.com cautionary tale. 2 Cornell students founded in 1995. That's a social networking site. IPO'd with a 600% first day gain. Founders worth $100 mil each on paper. Market cap hit $900 mil with barely any revenue. By 2011, the stock went from... Dude, by 2001, the stock went from $97 to 10 cents. Holy fuck. From $97 to 10 cents in 3 years. It was absolutely insane. The NASDAQ had a PE ratio of 200 at the peak. It rose 86% in 1999. What is the PE ratio of the NASDAQ and SPY right now? The vibes. At the Super Bowl in January 2000, .com companies ran over 20% of the ads. Oh, no. Oh, no. 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 Oh, God. Having only run 2 the previous year. The AOL Time Warner mega merger seemed to validate the new economy thesis. The dominant belief was that traditional value metrics simply don't apply anymore. We will compress more technological progress and economic growth in the next 2 decades than the entire history of civilization combined. The potential for runway upside is so vast, it's difficult to capture them with conventional present value calculations. The smart money is already leaving. In the month before the Nasdaq peak, insiders were selling 23 times as many shares as they bought. What actually killed it? On March 13, 2000, 3 days after the peak, Japan entered recession, triggering a global sell-off. Then Yahoo and eBay killed merger talks. Then Barron's ran burning up warning. Internet companies were running out of cash. MicroStrategy restated revenue due to aggressive accounting and created 62% a day. Bro, it was fucking Sailor. And Japan having a recession. It was Michael Saylor and Japan having a recession. Am I being trolled right now? Am I actually being trolled right now? Am I actually being trolled? Bro, MicroStrategy restated revenue due to aggressive accounting and created 62% today. The Fed had raised rates 3 times in 1999, and okay, I haven't had rates raised yet. Okay, so the NASDAQ PE was 200. Right now, it's 24. It's like 8x to go. For context, the .com peak NASDAQ had a PE of 200, so we're nowhere near that level of insanity. But the S&P is trading at 50% above its long run average. Okay. Dude, it was fucking MicroStrategy. How is it MicroStrategy? I have too many fucking tabs open, huh? Similarities. Traditional values don't apply. Massive capex spending with uncertain ROI. .com burn cash on Super Bowl ads in office space. Retail enthusiasm chasing momentum. Concentration risk. A small number of names were driving the entire market. The Mag 7 accounts for 30% of the S&P. In 2000, it was Cisco, Microsoft, Intel, Sun Microsystems do the same thing. The underlying technology thesis is broadly correct. The internet did change everything. AI almost certainly will too. Being right about macro didn't save .com investors. IPO funding made it for the companies with no path to profitability. Sounds familiar. Differences. The biggest one. Today's leaders are enormously profitable. Nvidia, Microsoft, Google, Meta are printing in cash. In 2000, Cisco was the closest analog and it actually had earnings. But most of the NASDAQ were companies with zero revenue. The current NASDAQ 100 PE of 34 versus .com's 200 reflects the gap. These aren't pets.com. AI is already generating real productivity gains. The .com boom was built on the promise of future utility. AI tools are already being deployed across enterprises and measurably reducing costs and headcount. The adoption curve is faster than the internet was. The money is being spent by the richest companies in history, not VC-backed startups. When .coms ran out of cash, they died. Microsoft and Google can sustain $50 billion annual AI spend from operating cash flow if returns take years. Interest rate environment is different. The Fed was tightening back then. Market breadth is arguably worse today. The .com bubble actually had thousands of companies participating. The current rally is historically narrow, a handful of names dragging everything up. This cuts both ways. Less total garbage to blow up, but more systematic risk if the leaders stumble. Yeah, we good. Speed of technology deployment. It took years for the internet to become commercially useful after the bust. AI tools went from novelty to enterprise deployment in 18 months. The feedback loop between investment and returns is much tighter. The valuation of losers. Okay, honest assessment. This is not 2000 by the numbers. The fundamentals are drastically stronger, but the behavioral patterns are identical. A correct technological thesis being used to justify ignoring valuation discipline entirely. The piece you summarized, the Kang article, is making the exact same argument Abby Joseph Cohen and Henry Blodgett made in 1999. This technology is so transformative that historical frameworks are obsolete. The risk isn't that AI is fake. It's that the market is already priced in the optimistic scenario, and any disappointment in the speed of adoption or monetization, not the direction, could trigger repricing. You don't need a bubble pop. You just need growth to come at 20% instead of 40%. And suddenly a 34x PE compresses hard. The .com crash wasn't caused by the internet failing. It was caused by reality arriving slightly slower than the stock market demanded. What percent of Super Bowl ads from yesterday were done by AI companies? We obviously have to do a full .com segment tomorrow, right? Like a longer one. %. Now connect this to the .com comparison we just did. In the January 2000 Super Bowl, .com companies ran over 20% of the ads. Almost identical. The parallel is staring you in the face. Let's see.
Okay, Dino. I gotta go to a lot of stores to get what you like. I'll be back.
If you leave me now, you'll take away the biggest part of me. Ooh, no, baby, please don't go. Ooh, girl, I just want you to stay. Hang on, Dino, we're coming home.
I was gonna do a bits to Adam stream tomorrow, but maybe we should do like a full.com, like find all the media. You know what's crazy? This video has 15,000 views. How about this? 2021 is here, and it sounds like the 99 now. It's everyone is here in everyone here from 4 years ago saying this time is different. Look at this. This is literally crypto 4 years ago. Literally Bitcoin and ETH maxis 4 years ago. We're so fucked 4 years ago. ETH to 14K 4 years ago. Same game. Time is a flat circle. Wow. I'm gonna tweet this. Wild. I was gonna do fucking pitch to Adams tomorrow, but should we just do a full.com thing? Like, what the fuck? I gotta go. I have a dinner to go to right now. We'll do this is the 6th stream. Tomorrow we might as well research fucking data centers to invest in. How to long compute in the .com bubble probably is what we're gonna do, right? That's like what we should obviously do tomorrow. Yeah. Dinner with my aunt. That's what we should do, I think, tomorrow. Would you, right? Would you rather do bits? We should do that, I think. I think we should do that tomorrow. Obviously what we should do. So we'll just do that tomorrow. Okay, fuck it. Let's do it tomorrow. Fuck it. We'll do bits to Adams a different day. Wednesday, maybe. Fuck it. Before I go, I have a Telegram that I type bullshit in. I will never tweet it because I don't want to be screenshotted and posted on Twitter by weirdos. But I only post it for the OG stream community. If you want to be in my Telegram, I just post dumb shit in there. Some ideas, some thoughts, some trade ideas, but mainly just like garbage, slop. It's fucking thread slopped. But if you want to join, that's the link. I like to show it because I'll put it in YouTube too for the YouTube chat. I'm pretty active in there. I type more there than I do on Twitter, surprisingly enough, because I think it's helpful just to get shit out. I'll throw it in the YouTube chat as well. If you want to join, it's fun. If not, I don't care. I really don't care if you don't join. But this was a fun stream today. Again, we haven't been doing that many interviews. And so you could generally just attribute an interview to we have a really smart guest that wants to come on. Like, I'm not going to give you a bad interview. They could be a little bit boring, but they're smart. I mean, guy works for Bloomberg. He's a Bloomberg analyst. You don't like get a Bloomberg analyst on stream every single day. So he's a fucking sharp guy. The first exclusive TG I've ever been in. Yeah, brother. You should do open class stream. We could do that. But I love you guys. I appreciate you. And tomorrow I will do, yeah, let's just rip that stream. I want to get long fucking compute is what we have to do. So we'll see what happens. I love you guys. I appreciate you all. I'm out. Have a good day tomorrow. We have 2 hours, 58 minutes. Best I can do, man. I love you. I appreciate you. And have a good one. Peace.